Woo! Here we go. We are back. MSTR True North Strategy True North episode 21. If you build it, they will come. We are going to get into it. It is going to be a great day. Episode 21 in honor of Bitcoin. And here we go. We are just going to jump right in. We've got a crew tonight. So there's 6 of us, including a new face on the screen. We've got Jesse Myers joining us, a special guest to help us dive into Strike and Strife and some of the new products that are being offered. We've got an agenda tonight. We're going to go over some recent buys, talk about leverage, give an update on that side. We're going to talk about recent events because it's been a couple of weeks since our last episode. I was on vacation. I'm a little bit more tan. I feel refreshed. I'm ready to go. We're going to talk about these new products that are being offered by Strategy, Strike and Strife, and talk about the $6 billion gorilla in the room being GameStop. An update on the S&P 500 chase. Where does Bitcoin need to be at the end of the quarter in order for MSTR to qualify for S&P 500? Talk a little bit about strategy world. We'll talk about that at the beginning. And then if we have any extra time, we'll just chop it up and see where we go. So without further ado, maybe I'll kick it over to Tim, please, the not financial advice intro.
All right. I feel like I've hyped this episode so much that like what you're going to hear tonight is definitely going to blow your mind, but it's not financial advice. It's for informational and educational purposes only. Jeff, back over to you.
Bingo. Absolutely. And for those that are new here, if we have any new GameStop apes that are joining for the first time, or if this is your first time you've seen MSTR True North because you're just excited to see Jesse speak, welcome. Thanks for joining us. This is a group of people that are coming together to talk about strategy, Bitcoin, everything that's going on in the corporate adoption Bitcoin treasury ecosystem and how it's evolving. Everybody that's on the screen and that's a part of the show has been involved in Bitcoin treasury strategy equities and how they've evolved over the last 24, 36 months and have been at the forefront of this trade, the bleeding edge per se. So, we're very invested in what's going on in the market, how retail understands the trade, what's going on in the capital markets, what the future development is, what are all of these new products, how do they work, who are they for, what are the capital pools, what is structured finance? And our goal is to, again, while this is not financial advice, our goal is to use all of our complex backgrounds to help explain what's going on. This is a very complicated trade. What strategy is doing in leveraging digital capital is very nuanced, and you have to have a very firm understanding of different perspectives of the financial world to really grasp the size and the scale and the gravitas of this trade and what strategy can potentially be into the future. None of this is intuitive, right? Like everybody on the screen is watching what's going on consistently over time. Again, we would have these conversations whether or not anybody was on them. Our thought was to just broadcast them widely and, get a chat and have everybody watching us talk and see where things go. So, again, without further ado, over to you, Jesse. We've got Jesse Myers on the screen. Jesse, glad to have you. I appreciate you taking the time. I know it's late at East Coast, but some of the research that you've done, I mean, Saylor has obviously quoted you a lot. You've got that kind of asset matrix, the global asset matrix, which I think is a really valuable framework in understanding where this can potentially go. And then recently, some of your research on Strike and Strife and the modeled projections on where Bitcoin can go 10, 15, 20 years from now. So okay, I'll give it over to you. Maybe you give a brief intro on yourself for those that haven't heard of you, and we'll go from there.
Yeah. Thanks for that intro there. Excited to be here. I guess a little background on me as a Bitcoiner. Been in this space since 2017. Ran an altcoin fund, did well in 2017, got murdered in 2018, had to figure out what I was missing, figured out it was all about Bitcoin, became a Bitcoin maximalist and started writing as Croesus about Bitcoin, and wrote why the yuppie elite dismissed Bitcoin, and then Bitcoin's full potential valuation, which is a model I put together with that chart. There wasn't really like a starting point for like how much value is there in the world. So I put together that chart of $900 trillion of value out there that Saylor has been using the last few years, and he built his valuation model on top of my framework, the full potential valuation framework, and that's how he got to his $13 million per Bitcoin expectation in 20 years, which is crazy bullish. But then when you dig into it, it's like actually very reasonable. So I've been doing a series of threads recently on digging into that model, which I'll be dropping another one of those tomorrow. And I've also been digging more into, what are the mechanics of what strategy is doing right now with Strike and Strife. And so I guess I can just go dig into that stuff now if you want to.
Yeah, well, just a little bit of background. Somebody was like, "Who the hell is Jesse Myers?" And it's like, well, actually, he's got double the followers of everybody on the screen right now, so he's more popular than we are. But yeah, Saylor's been carrying his model around. This, if you've seen the chart, you know what? Actually, I think I have it, and I will share it on my screen real quick. So if you've seen this chart, boom, it looks like this. $900 trillion of global asset value, real estate, bonds, money, equities, gold, art, etc. You see Bitcoin's just a tiny fraction of that. Jesse has put this together, and that's the framework that Saylor is running around the market.
And while this is on screen, I can tell you what I know Saylor has locked onto and why he shows this in his presentations. It's the bond bucket there, the $300 trillion in fixed income. Is the reason that he shows this chart on screen in his presentations, because he realized that is where the capital will flow from into Bitcoin more than from any other bucket. There's $300 trillion of capital sitting in bonds getting not great returns, and he knows that Bitcoin, because of its properties, will deliver great returns over the next 20 plus years. And so he has designed strategy to be a pump to accelerate the flow of capital from the bond market and into Bitcoin. And so that's what the Strike and Strife products are designed to do. And it takes what MicroStrategy's been doing and levels it up like massively, and creates the machinery, these vehicles that will allow Saylor to achieve what he recently said is his goal of, like, he said, look, we're tapping into the fixed income markets. There's $300 trillion there. So I want 1% of it. And, with Strike and Strife, that's how he's going to get up to $3 trillion of capital to buy Bitcoin with. And that's going to be, directly at the benefit of MSTR holders.
And they've raised $24 billion to date. So think about that $3 trillion number, and they've raised $24 billion to date. Actually, not to date. In the last 147 days, they've raised $24 billion. So we've got a long way to go, and I think it's a huge capital bucket that can just be absolutely attacked over time. So.
Isn't it amazing how crazy the framing is, right? Like when you say $3 trillion, it sounds insane. When you say 1%, you're like, yeah, that's reasonable.
Yeah.
Just the way you word things, right? It's beautiful.
And it's all these, just think about how much money is tied up getting, I don't know, 4.2% is what a 10-year US Treasury yields right now. So, so you're depending on what type of bond you're in, you're getting 4 to, I don't know, 10%. Or you could, you could use one of these. You could tap into Strife and get 12% is what the the introductory rate is at, and it beats the pants off of 4%, and it's probably not that dissimilar in terms of risk because of how over collateralized Strategy's balance sheet is.
Before we could easily dive into this and start talking about this for an hour.
Yeah,
but no, all good. I'm fired up about it too. We're going to get into it. But before we go there, we do have an announcement about Strategy World. And Grain, if you're on, I'm going to have you give that quick announcement of what our plan is for Strategy World, as we're going to have a little segment at Strategy World that we'd love for those that are joining to come attend.
Can you hear me?
Yep.
Great. So on May 5th in Orlando, that's the first day of Strategy World. We're going to have our own agenda that will start approximately from 12 to 4. We're putting that together with this group. You will be able to come to that if you're going to Strategy World, and we're working on the different time slots of what we're doing. We're also going to have a party after the strategy party that goes from 5 to 7. Our party will start from 7 and go later. And then if you want to actually meet us, we would recommend obviously coming to Strategy World. I believe Tim has a discount code and you can join that. And I think it would be great for you to come there and meet us. And then the following day, there will be the keynotes later in the day where there's the Bitcoin track at Strategy World. So that's what we're putting together right now and building.
Yeah, it's going to be a ton of fun. If you want to come meet us, we'll be there. I think a lot of people were probably planning to fly in on Monday or drive in wherever you're located. And we'd recommend if you've got the ability to come in earlier on Monday or come in on Sunday, I think we're going to be starting some True North programming on Monday around noon. So I think I'll be giving a keynote. Ben will be giving a keynote, and we'll have a panel and some conversations, and we'll take it from there. I think it could be a ton of fun. Looking forward to it. And I think we'll also be part of a panel potentially with Saylor and Fong at the end of Strategy World. So the final day there as well. So
Saylor just gave us a retweet on the stream, by the way, too. So
woo!
Buckle up, boys.
There we go. All right. Yep. We'll get the viewership up on that one. Bingo. I love it.
And Jeff, there was a question that I guess a few people are asking if it's going to be live streamed. We don't know if it's going to be live streamed, but it will be recorded. So we'll keep everybody updated on that. And just to be clear, it is free, right? So if somebody wants to come in Sunday night or early Monday morning, May 5th, Cinco de Mayo, then that's the day to hang out with the True North crew for, somebody else coined it, but True North World. Cinco de Mayo, Orlando, Florida.
Yeah, True North World. It's going to be a lot of fun. We'd love to see you guys there. And, it's been great meeting a lot of these people in person. So looking forward to it.
Would you have ever imagined in a million years that, here we are 21 episodes in, and this is the kind of stuff we'd be talking about, right? We all just started talking about one single stock in our respective basements or wherever Tim is in the world. That guy moves around more than anybody I know these days. So, but how amazing, right? We've come a long way. Here we are.
Absolutely. I remember I bought my ticket to MSTR World. I think the Saturday after MSTR World last year because I had massive FOMO of not going.
Yep, exactly. Right away.
I've been, looking forward to this for about a year. So yeah, it's going to be a good time. Okay. Great. So obviously we started the stream MSTR recent buys. We're now over 500,000 Bitcoin. We've got MSTR 506,137 Bitcoin. And I wanted to bring up a quick leverage update. We'll talk about leverage briefly, and then we'll get into Strife and Strike, and we'll maximize our time with Jesse here. So I'm going to share my screen again, and we're going to jump into leverage. And so we've been showing this every week here, and obviously Strategy's got their own statistics, and I pull some of their data in order to get some of the information that I show on the screen here. But you'll see, we'll hide this column over here, 326.25. That is today. So 506,000 Bitcoin held. Current price, I think it's more like 87,000. And so assets, MicroStrategy holds $44 billion of assets and $8.2 billion of debt, $1.5 billion of preferred stock. And so the current liability to asset leverage ratio is 18.7%. I've included some new metrics this week because there's about $1.5 billion of preferred stock. I've assumed a composite interest rate of 9, and this interest rate topic and this dividend topics is going to come up. I think a lot of people wanted us to tease out what's going on with this dividend. How do they pay the dividend? What's the scale of the dividend? 1 year of $1.5 billion of preferred stock at a composite interest rate of 9. I made up the interest rate of 9. It might be a little bit higher. One year of paying that preferred dividend is about $143 million. So if you include 4 years of the preferred stock dividend, so one entire Bitcoin cycle, that'd be $574 million. So a total debt Convertible debt plus 4 years of the preferred dividend, you're at $8.7 billion of, liabilities, debt liabilities, which brings us to about a 20% leverage ratio. As Strategy mentioned in their prior earnings call, their target leverage ratio is between 20 and 30%. So they've got a bit more capacity to potentially grow and leverage the balance sheet a bit more. So something to be aware of.
Do you want to make the point that like that 4 years of estimated dividends, that's the equivalent of last week's ATM usage?
Yes.
For scale,
right? Yeah.
Everyone's freaking out about it. But when you think about the scale, I mean, when you look at the 1 years, even if you just add on beyond what their cash flow is going to be in 2024, obviously had a lot of, restructuring costs and right sizing the workforce, all that kind of stuff going on. But, if you assumed 60 million in cash flow like they had the year before, and we'll see, right? We'll start getting clean numbers here going into 2025 as to what that looks like. But if you look at the delta between the dividend payments and the cash flow, it's probably the equivalent of like 20 minutes of turning on the ATM or something, right?
Right.
Like it's really, really small right now. Right. So, well, I think people are going to watch it. It's going to be a constant story. Like at the point that we're at, this is so unconcerning. You can hardly downplay it enough.
Right. So to that point, Ben, I've got the number right here. So Strategy has raised $24 billion in the last 147 days. That's a function of ATM on the common stock, convertible debt, and the preferred stock. So $24 billion in 147 days. So it's not even 365 days. And we're talking about $143 million annual dividend. So of the percentage of capital that's been raised in the last 147 days, that's 0.6%. So Ben, to your point, it's, maybe a day of using the ATM or 2 days of using the ATM on the common stock. So when you've got to zoom out, right? You got to zoom out and you got to look at the scale of the market. And Jesse, the perspective that you put together, right, with these equities and how these things are put together, Strategy being included in the QQQ and these passive flowing index funds, like you can have, there are people buying MicroStrategy stock frequently because of the architecture of the market and how it's designed and the trading volume. Strategy has been one of the top publicly traded companies, top 10 publicly traded company for the last 147 days in a row since October 30th. There's been a couple weeks where they're 11th or 12th, but they're, ranked 115th out of all US publicly traded companies, but they're top 10 on trading volume. There's a story there, right? There's a very compelling story there. And it's something that, me personally, I don't have any concern with them having the ability to raise $143 million, just given the excitement of the capital markets here.
Yeah, I don't think people have grasped the scale here at all, right? Like this is now a very, very significant corporation with deep liquidity in the market, well beyond what any other equity is going to see, right? I mean, the volatility that this thing has created and the trading ecosystem and the number of shares trading hands on a daily basis is just wild here. I don't think any of us quite expected it to get to the size it was. Like there was that point where the derivatives market passed up the market cap of Bitcoin in notional value. And that was so massive when you realize just how much trading was happening here. So there's always going to be that liquidity here on this one. And then the other thing coming out is we're getting more and more funds that are coming out that provide passive flows that are now tied to Bitcoin holdings and Bitcoin treasury companies, right? I mean, Bitwise just had one of the most recent ones. And so you're continuously getting this pool of new products coming into the market where people can allocate capital, and those passive flows are coming into MicroStrategy at a pretty rapid pace because they've got scale nobody else is even close to. So they make up such a high weight in a lot of those products that have come out. So the setup here is really amazing, and the liquidity is just absolutely astonishing.
Yeah, nailed it. Hit the nail on the head. Classic Ben. Okay, Jesse, maybe we'll kick it over to you and give us I'd love for you to give us just a brief intro on STRF, the new perpetual preferred stock.
Beautiful name, by the way. Perpetual STRF was amazing. I mean, kudos to the MicroStrategy team. That was amazing.
Just a wink at all of the Bitcoiners, laughing at all the fiat people.
Yeah, let's start there. I mean, so they chose STRF STRF, and they called it perpetual STRF because it's a perpetual product. And obviously they chose STRF because it's adjacent to strike as a word, and strike, had a reason to be called strike because there's a strike price embedded with the convertible debt portion of that. But STRF, that's not a term in finance. So perpetual STRF is not a term in finance. And I think this is about as big of a wink as I've ever seen Saylor give about what he's doing and how he views this as a speculative attack. I think is kind of between the lines, that this is a perpetual strife between the bond market and Bitcoin, and this is the vehicle that they are going to use to tap into the broader bond market. So again, that's that $300 trillion that we were just looking at on screen. And I think that's what Strife specifically will do. And it's important to put in context, like historically, strategy has been limited to individual convertible notes that you have to go through all the friction of creating and then going to market with them, and it takes months. And the new Strike and Strife offerings are, I think, deliberately designed to be easy for strategy to, like, same day, whenever market conditions are appropriate, sell at the market to source new funds for however much. It's basically infinitely expandable. They don't have to say a certain amount. Yeah, it's going to be the Strike ATM is 21 billion for now, but they can just raise that and buy themselves some more room to work.
So they've effectively taken a traditional financial debt instrument, and put it into a new wrapper. They just wrapped up this little candy bar in a completely new wrapper. It's like putting a Snickers in like a Milky Way bar, and it's just the same thing, but it's just looks different.
So I think there's a whole bunch of confusion about that. Like, okay, so it's preferred stock. But what does that really mean? And how does that dilute MSTR, right? Like, I think that's sort of one of the reflex concerns here. And it doesn't. It's really these are debt instruments. These are debt offerings. Strike and Strife. Strike is convertible debt, which everybody's familiar with at this point. And Strife is just an ordinary bond repackaged as a preferred stock offering. And so basically, it's designed to behave just like a bond does, and so that each share will receive a $10 dividend instead of interest payments every year, and they priced it at $85 per share to start, which amounts to an 11.8% effective interest rate. It's annual dividend, and that's very attractive. I sort of already alluded to, like, it's especially attractive if you understand how strong Strategy's balance sheet is and how low risk that promise actually is. I mean, you guys were just talking about at 0.6%. The dividend payments they have to make is 0.6% of what they've raised in the last half a year. And so, they'll be able to do that no problem. That's not 12% of risk. It's much lower than that. And so I think it's a very attractive offer, almost irresistible if you're a fixed income portfolio manager, and your mandate is like, get good returns, risk adjusted, right? And you can wrap your head around this, and you start to understand that this is actually not a very risky thing, but you can get 12%. You're going to do that, and what that amounts to is taking dollars out of the bonds that you have on your balance sheet, on your P&L, and you're going to convert them into, you're going to shift those dollars into Strife, and that amounts to taking those dollars out of the bond market and handing them to Strategy for them to buy Bitcoin with, and then you're fueling Strategy's whole vehicle.
Yeah.
So,
Yeah, real quick, I'm going to jump in there. So,
Yeah.
any bond portfolio manager, they look at their portfolio. They're looking at it frequently, quarterly, right? When things are rolling over, they've got new capital, they got to redeploy it, et cetera, et cetera. And they sit back and they look, okay, what is my world of options, right? Like I could take Microsoft bonds at 7%. I could take, treasuries. I could do all of these different things. And this new product pops into your field of play, and you see STRF. You're like, whoa, preferred stock that basically operates like that. It's probably going to take a while for the market to like even recognize that this is even a thing, right? Like it hit our radar because we're obsessed with this stuff, but it's going to take the debt market like years probably, right? I mean, all these debt fund managers are making millions of dollars on fees and stuff, so they don't care that much, but it's going to take a while when all of their friends start making tons of money on this product, and they start losing money to other funds that are adopting this product or adding little pieces of this product to their portfolio. It just initiates that whole game theory of like performance, the performance shift.
Yep.
Returns generate interest. Right?
Yeah, bingo.
Yeah.
I mean, ultimately, that's what's going to be the magnet that attracts all that capital to jump ship and come over here. Is because now you've got this unique offering that provides you with that additional alpha you don't have in your existing portfolio. And then you look at it from what strategies proving out to the market. And this is something that any of the Bitcoin treasury companies that come after this, owe them a great deal of gratitude, because they're out here proving all of these markets, and they're opening up every single segment of the market, which is going to allow other treasury companies to come in and pick and choose the right products for their own strategy. Because not every company is going to be structured the same.
Correct.
Right? If you get a growth company that comes out here, but it tries to implement a treasury vertical, right, as a value creation partner by becoming an LBE and using their vertical to do that, you're going to have a little bit of a different approach than you're going to have if you're a cash flowing zombie company. But what strategy is doing is they're opening up and testing the market and proving the demand out there, and they're showing them different ways. Like this shift in the ATMs over to these preferreds is brilliant, because these products are essentially self-healing. So on the common stock, if they go and hammer the ATM, right, that's inorganic selling pressure going onto the common stock equity. But that common stock equity doesn't have a yield that increases as you drive the price down.
Right.
So these other offerings, both of them, and I think there will probably be an ATM on STRF as well eventually. I know they got to hit some liquidity milestones before they can open that up, but they did strike pretty quick, so it probably won't take long. But if they use the ATM on STRK or STRF and they start driving it down, it might be at a, say strike is at a 9.5% yield right now. They keep pushing it down. It can go to 10 and 11, and eventually it's below what STRF is, but it's got optionality attached to it as well. So now money starts coming back into that product, raises the price back up. Like those are self-healing products. So it's a very different way to raise this capital, particularly if you find yourself in different market conditions than we've been experiencing recently, right? While we're in these bull markets, there's a lot of capital out there looking for these higher voltage offerings. But if you get into a lull period where we go sideways and the bond markets aren't available, or at least the terms aren't good enough to make it accretive, they've got these other options now, which are going to be far more stable. So the common stock price could come down, but these are probably going to be very stable in price, so they can hit those ATMs at that time to fill that void. So it's a really brilliant setup that they're proving out for the rest of the market. And everyone else is now going to get to customize from here. They're going to see the performance of each. They're going to be able to understand why you put this structure in place. And you might see other companies opening up these perpetual offerings at small dollar amounts just to have them available, just to have them trading. So when you need them, you can start going to them. So it's going to be interesting to see the next generation of the treasury companies come out to see how they deploy this playbook, because strategy's done such a good job proving out the market.
And the whole reason they could do this is because they're managing the risk of their leverage ratio. That's the whole reason they could do this. It's funny. I continue to see it. It's just so crazy to me. I continue to see all these articles. It's like the most over leveraged play on crypto in the market, or it's like the most over leveraged stock in the market. funny enough, I think Strategy might actually be one of the least leveraged companies in the entire stock market. I haven't run the analysis, but like they have so much more assets than they do debt on their balance sheet. And I'm going to bring this leverage sheet up once again to walk through one more thing. So basically, here's the actual up top, right? $44 billion of assets, $8 billion of debt that we just walked through. The really interesting thing here, 87,000. The really interesting thing here is of the convertible bonds. So I did a convertible bond analysis here on the bottom. I leveraged the data from the Strategy website. So here's the conversion. Wait, hold on. Yeah. So effectively, there are. Oh, it's hidden. That's right. 1, 2, 3, 4. 4 of these bonds are in the money. So their conversion price is in the money, and that is. Oh, that's why it's hidden.
Yeah,
there it is.
It's all except the 2 most recent, right? The 3 billion, right. Yep, and the 2 billion.
Hit a cell here. Hold on, just ruined my whole thing. Okay, so there's 3.2 billion that's in the money, so it could convert. So that's no longer debt on the balance sheet. That just converts into equity. Those are largely short positions held against Strategy. So once it's converted, it'll likely be just a net neutral conversion because the shorts will be closed out, the bond will be closed out, and the folks that made money on that trade will be knocking at the door ready for the next one. So it's interesting looking at the leverage ratio when you back out that $3.2 billion of debt that's in the money. Also, something to be aware of, that has $35 million of interest payments associated with it. So that gives them more capacity for servicing the preferred stock offerings. So when you look at the leverage ratio after backing out that additional debt, their leverage ratio is around 11% or 12% if you factor in 4 years of the preferred stock dividend. So $44 billion of assets, $5 billion of debt. Basically, the Bitcoin price would have to fall to $11,000 in order for the assets to be worth less than the debt on the balance sheet. So when you think about, see all these crazy articles of just idiots talking about how over leveraged MicroStrategy is, they're not over leveraged. Like you just have to open up the data and look at the assets that they hold on the balance sheet relative to the debt. So
well, I think it's even more nuanced than that because like the preferred offerings, because they're true perpetual instruments where they've got no triggers in there for them to go and redeem these, unless it's like a cleanup redemption where there's only 25% still outstanding. I think when we see the new financial statements come out, those will actually sit on the balance sheet as equity. So, it's a very conservative metric, the way that they look at this leverage ratio while they're including both of those categories in there, because I don't necessarily think it's going to get reflected that way on the balance sheet.
Yeah. Just to be clear, how I've reflected it here is just the interest payments of 4 years, like a whole cycle. I'm being conservative. I'm being like incredibly conservative with that, how I've got it reflected.
But that's the messaging out to the market, as we get new companies that are coming into this, right? GameStop had their announcements today, which is crazy. And I'm sure we'll get into that at some point here as well. But there's an education perspective that goes on here. They're assuming that all these Bitcoin treasury companies are these, risk hungry, wildly speculative plays. But these are some of the most rigorous risk frameworks that you've seen for corporations. They're very low leverage compared to most traditional operating companies are. And they operate on a very rigid framework that helps make sure that they stay in a position where they're always over collateralized. Like if they're only going to actively lever up to the 20 to 30% range, that's pretty low leverage, right? That means you're more than 3 times over collateralized on all of those obligations. And then they've got the ATMs available in case that leverage climbs up too high, right? If that starts climbing up too high, you start hitting the ATMs, you put more Bitcoin on the balance sheet. Now you've got more assets, you drag that leverage ratio back down. Like it's an actively managed risk framework. And people aren't really used to that, right? It sounds reckless, like Saylor's raising all this money and he's buying Bitcoin immediately with it.
It appears reckless from an outsider's point of view. It appears reckless.
Which is why it took us all so long to like look at this and go like, are we crazy or is everyone else crazy? Because everyone else is telling me this is going to blow up, and I'm looking at it going, this seems quite controlled.
Yeah,
like this is as controlled madness as I've ever seen. It's beautiful. I love watching this. So
because at the end of the day, it's the accretive dilution, and Saylor expects Bitcoin will continue to grow at 50% a year annualized, iron out the volatility through the cycles. 50% decreasing to 20% over the next 12 years and then staying there. That's his baseline expectation. And so, you were talking about the self-healing stuff with STRK and STRF. You can sell into the market, at ATM and drive down the price of that, and then the effective yield goes to 12, 15, 16, 18%, and and it still makes sense for you to do if you're actually dealing with an asset where you're going to make 50% next year. And so like the sheer engine that Bitcoin creates makes this whole accretive dilution thing possible, and makes it a no-brainer to do as much of it as fast as you can before everyone else does it. And I think that's what Strategy is doing here. They're sprinting towards how do we scale up our convertible debt offerings so that we can get, not $20 billion, but we want to get $200 billion, per year to be buying Bitcoin with, and having that sort of infinitely scalable facility like Strike and Strife, where they can sell into the market and make it irresistible for a portfolio manager to want to buy. Like, yeah, I'll take 15%, annual dividend.
Yeah. And I also don't think that at least the retail investing community has picked up yet that, forever there's been some criticism around Saylor's inability to be strategic in timing of his purchases. And a lot of that's because the economics of issuing convertible debt during some of those drawdowns aren't as good. So he can't get the same premiums during then. Now he's got tools where if we get a Bitcoin drawdown and he's got these stable products with ATMs on them, now he can be opportunistic and actually buying during those dips if he wants to. So it gives them all the tools to be flexible now that they didn't have before. So I don't think people have recognized how strategic that is. Their
granularity has been like within a month, at best. Like we're gonna be able to buy at some point a month from now. Like that's what they've been working with. But now they can literally play with. They've got 4 different levers of if the premium to NAV gets too high, they're going to sell ATM MSTR, right? If the conditions in Strike or Strife are favorable for them to sell into the market, they're going to do that, or they can borrow against their balance sheet too. Like they have options in a way that they didn't a year ago, and the time lag between deciding to take action and being able to take action has shrunk from a month or 3 to a day. So they're going to be able to do a lot more with what the market presents them.
Yeah, they've created this. Go ahead, Grain.
Yeah, so I was going to make a quick point. Look, the simplest narrative that can happen on mainstream media is that they don't believe that Bitcoin has any value. And so because the narrative for mainstream media is Bitcoin has no intrinsic value, therefore this leverage ratio is irrational. And so that is what gets people to watch that and be like, oh, he's levering up for doing this. So as Tad said, the cost of capital is Bitcoin. That was a quick paraphrase. So what's happening is if they play to that narrative, which is the fear, uncertainty, and doubt, which we all call FUD, then that's what gets the viewers on mainstream media. Oh, this can't take the bond market, which Jesse's talking about, because it has no intrinsic value. That plays to the older crowd that watches that channel. But when you come on a call like this makes a lot of sense to us because we've done the homework, done the research. Let me be very clear. Jeff and Ben have done that. And from that perspective, we could be comfortable with this because we understand it. So that's my takeaway. I think what you guys are saying sounds great, but that's how they get viewership to their older market on mainstream media.
Absolutely. And traditional finance, right? They're all using models that were built in 1965, right? Weighted average cost of capital and CAPM. You've got risk-adjusted framework where you think about the world in like quarter over quarter or year over year. And Bitcoin is breaking that framework of how the market should think about capital, right? If you zoom out and you look at Bitcoin as a 4-year duration instrument, a 4-year asset or a 5-year asset, based on its history and its performance over time, and the purely limited, the scarcity of it, you completely rethink like how your whole financial model works. And Saylor is one of the first ones that's figured it out, right? This is the cost of capital. There's no other better investment in the market right now, right now. That may change at a point in the future, 20 years down the road after this gold rush is over for the next 20 years. And then at that time, it may be shifting into other assets that are depressed, whether that be oil or land or real estate or, whatever that might be, when the Bitcoin yield is a little bit more difficult. One last point before we go to GameStop and start, talking about apes and stuff. The whole reason that this works, is strategy is leveraging their balance sheet as collateral. So they've got all this asset, right? Like they've got all this incredibly volatile asset. Bitcoin is incredibly difficult to underwrite as a risk asset because it's got a ton of volatility. So, right, like traditional underwriters see Bitcoin as incredibly volatile. They don't want that. So they are getting these alternative products via the collateral position of Strategy's balance sheet. So they've monetized. Strategy has monetized the positioning of the collateral on the balance sheet. So convertible debt is most senior. What is it? Preferred stock, perpetual strife is second. Strike is third, and then the common stock is fourth. So those all have different. Those are different, separate collateral positions that have different risk return frameworks. So that's the entire reason this works. And other corporations can adopt this too. Is you're taking this volatile asset and you're using a transformer. The transformer being the corporate balance sheet, and you're transforming it into different collateral instruments that have different positions within a capital structure. And that's the whole reason this works. They're leveraging their balance sheet as collateral. All of the revenue and the Bitcoin yield is just skipping revenue and it's going straight to earnings. And it's just a different framework that is like really blown people's minds.
Well, I'm not even sure it is yet because I don't think they figured it out.
They haven't figured it out. They're just bewildered. Everybody's bewildered. There's gonna be so much bewilderment. Oh my God, people aren't gonna figure this out for so long.
Jeff, speaking of bewilderment, super quick before we go to GME, as everyone can tell, we're going higher, but also the Hurdle Rate podcast, which we're very excited about, it is not replacing True North.
We need
just
to,
to be clear.
Yeah. So Ben, Tim, myself, and Matt Cole, we've got another podcast that we're going to run weekly. It's going to be separate from this. We're going to talk about all things econ. We're going to talk about this concept of the hurdle rate and get into current events and things that are going on. So it should be a good time.
But not a replacement.
Not a replacement. Yeah, no. True North is we're staying on here. So shall we talk GameStop, the $6 billion gorilla? Maybe Adrian, you want to give us an overview of what we got here? What's going on with GameStop? Get you in the mix?
Sure. I'll give a high level overview. GameStop is hopping on the Saylor bandwagon is the way I see it.
Yeah.
They issued, what is it, 1.3 billion? They want to issue 1.3 billion to buy Bitcoin and cover corporate costs, of course. And this is something we've talked about like in passing for months now. What if GameStop does it? They'll be the perfect corporation to do it. They've got cash on the balance sheet. Why wouldn't they? And the fact that I don't know if we memed it into existence, but I definitely think that Ryan Cohen was watching. He was paying attention to Twitter, and that picture with Saylor. Now looking back on it, I think that was pretty much the signal. Everyone was saying, could this be the signal? But now looking back on it, I really think that what he was doing was that he was priming the market to start getting the chatter going for when the move actually happens. Now, what I'm curious to see is the GameStop crew, as you know, Jeff, because you were a member of that Wall Street Bets run-up. They are a pretty rabid bunch, right? They're as insane about GameStop as we are about Bitcoin and about strategy.
They're loud,
very loud, and they've also got quite a few large influencers, on YouTube, on X, on Instagram, on TikTok, that are pretty vocal about their GameStop investments. So I think that this has potential to be a pretty good investment. I have not purchased yet. I think I am likely to once I do some more due diligence on it. I do think that any comparisons between MicroStrategy should be measured at the moment because we still don't know what they're going to do, right? Looking back on strategy in 2020, I wouldn't have foreseen all the convertible notes, all of the ATMs, all of the acquisitions, all of the aggressive moves that they've made to acquire Bitcoin to get them to over 500,000 Bitcoin, right? So I think that people should not assume that GME is going to go to that level. However, just because of that, that should not let them think that it's not going to be a very, very worthwhile investment. This is all not financial advice. I'm just saying, view GME as its own vehicle. What Saylor is doing, as you and Ben and Jesse have been discussing, in my view, is creating a whole ecosystem or an economy around Bitcoin. And he's putting Bitcoin smack dab in the center of traditional finance. What I think GameStop could do is use Bitcoin to ramp up the volatility on their stock, right? They're going to run the Saylor playbook to a different end. I don't know if they're going to be thinking about getting to 250,000 or 500,000 Bitcoin. Yes, Tim, higher. I think what they can do is use Bitcoin, use convertible notes to increase the volatility on their stock, increase the open interest in the options market, get those premiums running, get more overall interest in their stock, which is going to have a different kind of a feedback loop than we're seeing with strategy. So while they're going to run Saylor's playbook, I think they're going to run it to a different end. I think there's going to be more convertible notes, more probably less ATM if I had to take a wild guess. However, if it turns out profitable like it has for strategy, I don't see why they wouldn't start cranking up the ATM in coming months and years to be accumulating Bitcoin and to use the convertible notes. I don't see them issuing something like Strife or Strike or anything like that. But that's just my overall 1,000-foot view of it right now.
Can we admit they're running the playbook though? If they launch Game Strife and Game Strike, then do we know?
I think they're running the play. The fact that I think the fact that their first purchase is going to be through convertible notes, I think that is obviously running the Saylor playbook.
I actually think it was much more tactical. I had to look at it for a little while because I was confused like everybody else as to why they were starting with convertibles when they had so much cash. But I actually think the answer, and I put out a post because I just went through the 10K quick to look at the numbers to see kind of how they stacked up. And it actually feels far more measured than what I thought. And what I think they're doing is I think that the markets were open right now. Strategy has been out of the convertible bond market because they're launching. They've been doing these 2 IPOs. They've got these products to go. So I think there were buyers out there. And because they had 0%, access to 0% capital, I think they took that opportunity to get it. And when you look at it and apply it to the balance sheet, it would actually put them at like a little over a 31% leverage ratio. So if they deployed all their cash, they took in the 1.3, bought Bitcoin, put the 1.3 liability on the balance sheet, it works them out to about a 31% leverage ratio, which is right in line with Strategy's playbook. So it's actually, from putting the right amount of leverage on the balance sheet, it's the right amount of capital. So that signals to me that, they might be very serious about this, right? Because they're taking that approach. So if they think that there's going to be a little bit of appreciation that comes here in Bitcoin, because there's a lot of buying that's going to be happening, they could be right into that 20 to 30% range in no time. And they can deploy the cash whenever they want to, right? That's not hard to do. They'll be able to buy Bitcoin with the cash, but getting access to 0% capital is a different thing. So if that window was open for them and they want to get that leverage and that sensitivity to the volatility of Bitcoin in the balance sheet, I think they took that opportunity right away because it came right after the earnings announcement, right? I mean, they'd clearly been planning it. I just think they took that opportunity to set it up and get them into the right position to do everything you said, Adrian, right? Create all that volatility, create the interest in the options market, because this is a very different stock than it was during the last time, right? The last time they had 140% short interest. And I think now it's like 6.9 or 6.7, right? Like it's really low. The short squeeze thing is not, it's not the play here, right? That's not what's going to happen. But I think this is a very possible next evolution for them as a company. And I think they recognized that. And based on the metrics I'm seeing and the way they're structuring this, it seems just calculated enough for me to think they've been following Saylor, they listened, and they understand it. So we're going to see. I always like to see them buy Bitcoin first before I get too excited about these things, right? I'm in the show me phase of the Bitcoin treasuries, but it was very, very encouraging when I actually looked at what those ratios were going to look like, that they're approaching this methodically.
Yeah.
And Oh,
Go ahead.
sorry.
Go
Oh,
ahead.
yeah. And I think that I saw it in a way that, and Ben, you and I chatted about this very, very briefly. The reason why I think that they can use the volatility of Bitcoin and use the converts to really drive up the interest in their stock is because given the, what can we call it? The meme-like nature of GME
Yeah.
or the memeability of GME, the open interest on the options market can explode. That's what I'm going to watch. I'm going to watch what happens in the options market, because that in my mind tells me where this thing is going to go. If it even captures a fraction of what has happened with strategy in the options market, this is an amazing play in terms of just when it comes to generating passive income, running covered calls, in the money, out of the money. You can run all the different kinds of plays that you want. But that's what's really going to drive the interest in the stock, I think, is that volatility. Because people waiting for the next kind of I know we joke about having Roaring Kitty back in the mix and whatnot. What happened with the Roaring Kitty Wall Street bets move? That was because of COVID. That was because of the lockdowns. That was because we had low interest rates. We had stimulus in the market at the same time. We're not going to see that environment near term, right? What we will see, however, is the ability for a stock that already has a very, very rabid fan base getting a lot more interest in the stock again for a whole new set of reasons. And if they really
Bingo.
catch on, if they really catch on to the Bitcoin treasury play, and they really start playing all the different ways that they can run this thing up. If I'm a guy with excess capital and I see that GME is running the play and I see that they're running the Saylor playbook, I'm looking at MicroStrategy, I'm looking at the options market, I'm looking at the volatility, and I'm saying, I want to get in front of it, right? You want to get in front of it before the options market starts to really ramp up and before that volatility really starts to ramp up. So in my mind, this is a different Bitcoin. This is a different leveraged Bitcoin equity play. This is not a
Yeah.
strategy-like play. This is not like a Semler play. This is a very different play that's going to be probably catching waves of volatility while they're accumulating Bitcoin and seeing how you can play the market with it.
But there's one way that I'll say they're probably the most like MicroStrategy out of any of the other plays that we're going to see. And that is that the one thing MicroStrategy has above any of the other companies that have tried this is, one, they've got a leader that's very public that people want to cheer for. And they've also got a really engaged retail investor community that's constantly generating media and social media and awareness of the stock all over the place. I can't remember who made the post, Jeff. We talked about it before, but there was this ranking of the engagements of
the
all these
engagement
companies and their social media posts and then how much people were engaging with them. MicroStrategy was 4th, GameStop was 5th. So right now, MicroStrategy actually had more engagement through all their social medias through that retail investing base, and GameStop was right after them. So GameStop already has a built-in retail fan base. And I do actually think that's really important for this strategy to truly generate that type of interest. And they've also already got some scale and liquidity to their equity. So they've got a little bit of a head start over the other ones. And Ryan Cohen, I mean, people love him, right? I mean, people have been rooting for Ryan Cohen now for a very long time. And if he decides to step out and be very public about their approach to Bitcoin and what his beliefs in Bitcoin are, and he starts generating some confidence that he really understands this play and he's the guy to execute it, which I absolutely think he could be. I think then you've got another contender for someone to really run this really effectively, right? Are they going to catch strategy? No chance.
No.
But they could run it very effectively as the next biggest in the US markets for sure, well, in the world.
I think
And to
there's,
Ben, oh, sorry, go ahead.
I'm just going to add, I think there's another element that's necessary here. I think that's kind of what struck me about the GameStop announcement was with MicroStrategy, MetaPlanet, and GameStop, they're all zombie companies. They all had a burning platform, a reason why they needed to take a serious look at the mirror and say, we can't keep doing the strategy that the path we've been on. We have to radically reinvent our approach to delivering shareholder value. And I think that's in the Bitcoin community, everybody asks, when is Apple, when's Microsoft going to buy Bitcoin? And I think we kind of have the answer here. It's it's going to be zombie companies first, and companies that are delivering profits traditionally are going to be kind of the last to adopt Bitcoin as a treasury asset, I think. And so, great. It's fantastic for GameStop. It's the best thing they could possibly be doing. What other zombie companies are going to be next because they're desperate, because they need to have something to change their future. And I think that's where people should look for the next, adopters of a Bitcoin treasury play.
There's something like 2,000 equities that have a market cap between $50 million and $10 billion. And of those, half of them are profitable, and the other half are, drowning. And so now you've got a list of 2,000 companies that are just sitting there every quarter. What the fuck am I going to do? Where do I go? How do I survive? Right. Go ahead, Adrian. You want to say something?
Yeah. So I think that we shouldn't forget, we do have a Mag 7 company that has Bitcoin on the balance sheet, right? We have Tesla. Now, I think that Tesla is, if we're going to look at one of those huge companies, I think they still have a chance of accumulating more Bitcoin on their balance sheet, right? Now, when we look at NVIDIA, when we look at Apple, when we look at all the other ones, maybe, and I know we say Meta is a likely play. I don't see how they can enter in the market without blowing the market up, right? And what I mean by that is, if NVIDIA were to announce that they're going to put Bitcoin on the balance sheet, well, what's going to happen? The market's going to go nuts, right? I don't think they want that. I think that the time for another Mag 7 company or another huge player, to Jesse's point, to come into the fray, sorry, I think that has passed. And I think that right now it is going to be those zombie companies, like, Eric Semler had the Zombie Zone, and he's been highlighting those different zombie companies that can be candidates to adopt this play. The thing with GME that I also think that people shouldn't underestimate, and it's going to sound really weird for me to mention it, the gaming community, they are
tech nerds,
flush with cash,
tech nerds,
and they are highly, highly rabid. And if this thing starts running, don't be surprised if we start having gamers talking about Bitcoin and options trading and all this other stuff.
Yeah, it's going to be the new game.
It's going to be a new thing for them. This has the potential to have an entirely different kind of trajectory as opposed to what strategy had. So I definitely think that I'm still being rather reserved with my view of GME, because, like Ben, I kind of want to see. They've said that they're going to purchase. Okay, great. I want to see the purchase happen. I want to see that announcement, and then I'm going to make my decision as to whether or not I'm going to dump some cash into GME and see what happens. Because, like I mentioned, I want to get in front of the run up in terms of the volatility. But until that point, I want to encourage everyone to be somewhat measured, but really understand that this is huge. GME adopting a Bitcoin treasury is a huge move. They are a fundamentally different company. They are, in my mind, a signal that there's probably other mid-sized companies, zombie companies that want to get into the fray. And I think that we have a very, very exciting 5 to 10 years in front of us.
Yeah. As a past GameStop holder, in the run-up, I know some people know this story, but I liquidated my entire portfolio. I thought it was the craziest thing ever. I bought GameStop shares. The first on a Friday, I bought GameStop puts. Over the weekend, I realized I was totally screwed. Sold the puts at a profit on Monday morning. Liquidated my portfolio. Bought GameStop shares. Held them for 2 weeks. It was the craziest 2 weeks of my life. Totally ruined vacation with my wife. Watched everything happen on Reddit. Everything just kind of blew up, and I was watching it happen in real life. And I was going through the game theory of like, what's going on here? Like, who's trading? Who cares? Who's watching this? And it was very clear, like, retail had a ton of power, right? Retail was overwhelming the traditional financial markets, but there were also hedge funds that were betting on this and going the opposite direction. And over the weekend, like after Robinhood turned off the buy button, it was very clear there was manipulation going on. And you had to sit back and think about, like, okay, what do I actually own? What do I own with this equity? And you start, right? Like, you're looking at the fundamentals and like, okay, if there's manipulation here, what do I own? And at the time, GameStop had like $500 million of net assets. So I don't know, maybe they had $2 billion of assets and $1.5 billion of debt. So they basically were, they had hardly any money left, and they were valued at $30 billion. So about a 50x mNAV for you 1x mNAV Ponzi bears out there. So they had about a 50x mNAV, like a multiple on their net asset value. And I'm just sitting back here like, okay, they got to do something with this, right? Like how, otherwise this thing is dead. And so I made a decision. I liquidated on Monday that after the weekend, realizing that manipulation was in play. And like, what am I actually holding if there's manipulation and I can't like I can't control this, go the other way. Now, where this is incredibly interesting moving forward into the future is that now GameStop has a nuclear core, right? You have the strongest capital asset on the planet that has capital appreciation potential of a 50 CAGR, with Bitcoin potentially being at, $13 million 20 years from now, valued at $87,000 today. So when you take a step back and you look at, okay, well, now if you have $6 billion of Bitcoin on your balance sheet, that could be 250 billion or 500 billion in 20 years. I mean, that's a completely different value proposition of like what you're actually holding. And that's one of the reasons I feel I'm fundamentally comfortable holding MicroStrategy, because I think this is the most powerful and the strongest financial company that the world has ever seen. Most of the world just doesn't realize it yet. And, corporations that are early to the fray here with adopting a Bitcoin treasury strategy are going to be strong financially and have ultimate flexibility to leverage their collateral in many different directions and buying assets into the future, or, doing whatever into the future. They're going to have ultimate flexibility. So that's one thing that's incredibly appealing to me. And that's what I went from GameStop to MicroStrategy. That was my transition. And because it was this phenomenon that I was seeing over time of like, okay, retail importance. What am I holding? What is an equity? How do you value an equity? Okay, what's the strongest equity in the world? And I was realizing that, Bitcoin is incredibly strong, incredibly powerful, incredibly, it's got a great potential future. And that's kind of how I got into this trade. And now, starting to see these other Bitcoin treasury companies coming into the market here, it's incredibly exciting, because this is the new wave of Bitcoin adoption, is corporate adoption, and then you've got U.S. government potential adoption as well, and other nation states. It's an exciting time to be in Bitcoin, be working in Bitcoin, and just speculative attack on the debt market.
Yeah. So, Jeff, I have a quick point about this. Excuse me. So previously, when Amazon got launched and Tesla and any of these tech companies that we have today, they had undefined PE ratios. What I mean by that, because they had no earnings per share, the price was over zero. So you take the price over zero, therefore it's undefined. And what mainstream media would do, would say, is why invest in Amazon if they have their PE ratios undefined? You're just betting based upon, speculatively, based upon some future earnings that you may get. So if you miss the first 3, 4, 5 years, then basically the fundamentals, the people look at the fundamentals of the stock, just say, why would I invest in it? Because they kept on reinvesting those dividends. And what happened is they ended up having iconic CEOs. So you have Jeff Bezos, you have Elon Musk, and so forth. And so what happens is they don't like that, because, oh, you're just buying into something based upon momentum. And from that perspective, that is uncomfortable for what the traditional people do on mainstream finance. So now what we have is the same thing happened with Ryan Cohen, that obviously launched Chewy, made a whole bunch of money there, switches over to GameStop, and they're like, oh, this is what gets eyes and what is comfortable to those viewers. So again, you have a choice. You could either be early into something or you could be late. And what we've seen is that, being early tends to pay off better than being late. How many times everybody think back, oh, I wish I stayed in Amazon in the beginning. But you do have these big drawdowns, and they love to talk about that. So
yeah, I think we should do a brief intro, maybe Ben, on convertible debt. If there are GME people watching about convertible debt, prepare for volatility, right? Prepare for volatility. This isn't up only. GameStop's not going up only. It's going to be traded, and you've got a new horde of traders. You got $1.3 billion of traders that are coming into the fray that are going to trade this in both directions. They're going to trade it going up, and they're going to trade it going down and make money on both sides of the trade. And you'll likely see it have peaks and troughs, and the troughs will be higher than the prior troughs. And it's going to have a peak, and it's going to have a trough, and the trough will be higher than the previous. And it will be a function of Bitcoin. It will be a function of arb trading. And there's going to be more and more volatility coming onto the scene. Like this isn't up only. I saw somebody mention it's going to go to 100 and back to 25, probably, right? Like somebody said the market doesn't know what convertible bonds is, so GameStop sold off after market. And it's like, no, convertible bond traders are probably trying to push the price down to get a good price on the convertible bond, right?
Yeah,
like this isn't, retail isn't dumping because they don't know what convertible bonds are. Like it's getting manipulated from smart capital. So maybe Ben, I'll kick it over to you to do a quick intro on CBs, maybe.
Yeah. No, we can talk about it a little bit because they're about to get a crash course in it because they're going to figure out what these pricing periods
We've got all the
about.
content. We're True North. We've got all the content.
Yeah. And it's going to be a little bit of a system shock as well, because they're also about to find out that the hedge funds that they rallied against so hard are now their partners. So that's going to be a mindset shift for the GameStop crew here. So buckle up for that one, guys. But yeah, I mean, and maybe I'll just talk about the pricing periods for now. Maybe we won't give everyone the full convertible bond backstory again here. But, essentially what you've got when they announce these bonds is the investment banks go out and they find all the investors that are going to buy these bonds, which is largely going to be convertible arb desk, right? These hedge funds that are the ones that buy these bonds. And these are arb traders. And what happens is they go into a pricing period. And so the pricing period for GME will probably either be tomorrow or Friday, depending on how fast they move. And that pricing period is typically a matter of a couple of hours. So it's usually, I think, 4 hours is what I've been seeing a lot of them being. Sometimes they've been 3. And during that period, they're essentially taking a VWAP of the price throughout that period. And during that period, the people that are getting allocations to the convertible bonds are starting to put their short positions on. So whatever that pricing period is from the beginning to the end, they're applying their short positions all the way to the end, so that by the end, when they get their allocation, they've got the right short position locked in, which locks in their delta position that they're going to start trading from. So what you tend to always see is during that pricing period, the price just steadily goes down, right? Because you've got all this new shorting activity that's hitting the market. You've seen it over and over with MicroStrategy. It was very confusing for a while, but eventually it kind of becomes familiar once you've seen it a few times. So people are going to see that. That's going to be coming here in the next day or two. I'm not telling people to go, try to trade that or anything, particularly if you're not overly familiar with it. But then from there, they're gamma trading, right? So these big arb desks are going to be gamma trading. But the good news is a lot of times with these convertible bonds, they've got 50% of the shares sold by the time they're done with the pricing period. So they'll be at about a 50 delta, and then they'll be trading from there. So the bulk of the selling pressure that happens throughout the life of these convertible bonds happens during that pricing period. And then as price goes up, they'll increase their short positions. And if price comes down, they'll take them off, right? They'll buy back those shares. So that's kind of gamma trading at a super, super simplistic level. And I don't think we want to go too far on that for tonight, but that's kind of the general basics. A lot more nuance than that, but it gives you a general idea.
Perfect. If none of that made sense to you, we've put out tons of videos on this. If you want to learn more, it's on YouTube. You can look back on some of our previous True North presentations when they issued some of their initial convertible bonds. I've got conversations with Richard Byworth on MSTR True North. You could dive in further, get an understanding of how they work. It's effectively a debt instrument that turns into it's a debt instrument on the downside, equity instrument on the upside. It's a hybrid product. And because it's a hybrid product, it results in a lot of mispricing and arb opportunities between the bond and the equity, kind of when it's near the conversion price. So fascinating product.
Yeah, the one last piece that we should just give people a heads up on is when these come to the point where they convert, there's going to be fear running around the internet about this massive dumping of shares that's going to come. That's not real, because as we just described, they've already done a lot of the shorting. Those shares have already been sold. With their brokers, it becomes a netting position, right? They receive the shares from GameStop. The broker nets those against their short position. It washes out that trade. It's not a big market sell of any of the shares associated with it. So that's just the preview for what happens when they convert, but that's a ways off in the future. Maybe not if Bitcoin goes crazy this year.
Right. Right. Okay. Maybe shift gears out of GME, the $6 billion gorilla. Maybe we'll go into S&P 500 chase, but let's actually briefly talk about strategy being at half a Nakamoto. I mean, holy moly, 506,000 Bitcoin. That is crazy. And you know what? I'm going to pop over here. And Jesse, I would love that. Now that we've got you on, I would love to get your thoughts on how much Bitcoin. Actually, before I share my screen, hold on. Before I share my screen, how much Bitcoin do you think MicroStrategy will have by the end of the year? At the end of the year, 12/31, 2025.
Wow, that's an interesting one. I haven't actually thought about that. Boy, end of the year, I bet that
they ended 2024 with 446,000. And they started 2024 with like 176,000. Just to put that into perspective.
Wow. I mean, I guess my base case would be like 750.
750. Okay, base case 750. All right, so I'm gonna
yeah,
I know 750. So we guessed at the beginning of the year. So I'll put you in here. You're going to be below, but you're not part of the bet because you had to be here at the beginning. But just to throw. So we're at 506,000 and some change. And here are the estimates. Here's our progress on the estimates. So Adrian's at the bottom, 650,000. Ben had a very precise estimate, 656,400.
I think Adrian played games down there, by the way.
Yeah, he thought it was.
I may have.
So
it's a good money move. I can respect it.
Yeah. And we're making some pretty good progress here. We're through March, but we've got something like I don't know. Well, with the addition of the preferred stock ATM or something, what is it, like 50, 60 billion of capital that they could potentially raise as part of their capital plan. And who knows if they add more common stock ATM here coming up into the future, particularly if we're thinking about the S&P 500. So wanted to talk about the S&P 500 real quick. And Jesse,
I've one thing to add there, though.
Yeah.
Like, I think my estimate is most sensitive to, like, I'm super bullish on Strife for what it can do for strategy. I think what remains to be seen is like how liquid, how much trading volume there ends up being in that market, and how quickly they get to an ATM and how quickly they can just start selling that. Because we've been talking about convertible debt, and that's 2% of the bond market of the total value stored in bonds. So everything that Strategy's done to date is 2% of what they're targeting, and then Strife is how you get to the other 98%. So like the potential to tap capital there is enormous, depending on how quickly portfolio managers wake up to, like, oh, I'm gonna buy this product because it's mispriced risk. So if that happens quickly, they can source a ton of capital, and that's, I think, the difference between potentially 750 at the end of the year and $1 million.
Right. Yeah. If they're able to if they're able to raise a bunch of capital in this this new debt market and this new instrument, I mean, I'm sure their team is going to be running around trying to talk to people, traditional debt portfolio managers, and explain, like, hey, look, this preferred stock is actually just traditional debt. It's just in a different wrapper, and you can access it, and it's fully liquid, right? Like, it's extremely liquid, and yeah, it just looks different. I'm sure that's a huge marketing push. Tim, go ahead. You wanted to add something? Go ahead.
Yeah. So this would actually, correct me if this makes sense or if it doesn't. This would be bullish for strategy. My prediction, you can see on there, is 1 million Bitcoin by the end of the year. And Josh Mann is there at 1,050,000. But think about this. My prediction is that Bitcoin's going to be at $1 million by the end of the year, and Josh Mann's at 4,444, whatever. So if Josh is right, that would be super bullish for MSTR. Does that make sense?
Yeah, it's incredibly bullish. Was it 450 billion worth of assets sitting on the balance sheet, I mean, yeah, that would be pretty incredible. And the
with
debt,
a price, yeah, with a price at under $500,000, that'd be awesome.
yeah, pretty
I
incredible.
mean, I think it's possible for Strategy to hit 1 million Bitcoin. I just don't think it'll happen this year, but it's going to happen. And when the price is at anywhere near what Saylor thinks or Jesse's model thinks can happen, then
Well, yeah, it's part of the probability curve, right? I mean, there's so many things that can happen, and you know what we saw when they were added to QQQ and the run up on QQQ, right? They were able to raise $17 billion in 40 days on the ATM, and it was totally incredible, unprecedented. Obviously, a bunch of retail came in at that point as well, but their ability to raise capital is huge, and and we're talking about potential S&P 500 inclusion, which on a scale of QQQ relative to the S&P 500, the S&P 500 is about 10 times the amount of assets under management than QQQ, and the capital that follows it. Yeah, there are 500 stocks in the S&P 500 relative to 100 in QQQ, but still, we're talking maybe 4 or 5 times the potential impact of Strategy getting included in some sort of instrument like that. So,
and on Adrian's math, just to make it clear, like, in 20 years, if Bitcoin's $13 million per coin and Strategy only gets to 1 million Bitcoin, it's a $13 trillion company right there.
13 trillion, 13 trillion. Yeah. Just on assets, no multiple, no multiple applied to it. Right. Like,
right.
Like any future ability to yield Bitcoin based on, you know, whatever. Yeah. It's hard to conceptualize.
What are the converts going to look like at $13 trillion? What are they going to be able to do in the market at that price? This is what I love to think about. It's just unreal.
Yeah, I think that's where like Strife starts to replace like U.S. Treasuries in a lot of portfolios.
Whoa. Okay. Explore that. Just throw it out there. Let's talk about that. That sounds fun.
Like, you know, what's the risk-free rate, right? You park your capital in Treasuries, you get 4.2% and on the 10-year right now, and that's your risk-free rate in global finance. By the way, side note, Saylor's model expects like 8-9% inflation CAGR for the next 20 years. So if you're earning 4.2%, you're getting, you know, you're destroying 4% a year in real terms by sitting in U.S. Treasuries. Anyway, I think Strife is mispriced risk. Like, it's not that risky if you have a balance sheet like Strategy does, and you're playing this playbook. That there shouldn't be that much of a delta between U.S. Treasuries and Strife. Yeah, like it shouldn't be the same, but it shouldn't be 8% or whatever that is. And so I think that you're going to start to see as Strategy becomes this behemoth. You know, if you get to 13 trillion plus a multiple, you're living in a world where like that is the most trustworthy place to park capital outside of the U.S. government. But like, so you're going to start to see a shift from people allocating 100% of their sort of risk-free capital to U.S. Treasuries to, I don't know, 90% to U.S. Treasuries and 10% to the Bitcoin risk-free rate, which is Strife. You know, and then you've diversified your portfolio. That diversification has some benefits in itself. And, you know, like that's, I think, where we're heading as Strategy becomes a bigger and bigger part of global finance, because it is the place to get Bitcoin yield, dollar yield for Bitcoin performance.
Well, and to people that may think this is lofty and not possible, to my point earlier about Bitcoin, Saylor essentially placing Bitcoin in the center of a new world economy. When AI and robotics really start to take off, it's going to eat a lot of the market cap of a lot of the junk companies that exist right now. We're going to see, I think, a bifurcation of the economy, and people are going to be looking for new places to park capital. This is where the value proposition for something like Strategy and all the different levers that exist becomes very, very attractive. That capital can't all just sit in the Mag 7 and blow and just not be gaining any yield or not be being exposed to other assets, right? They're going to need other places to go, and I think Saylor is seeing that. If you take a look at if you ever read his book, The Mobile Wave, he has a very keen sense of where markets are going to go, and I think he envisions a world, because he's been talking more about AI and whatnot in recent months. I think he envisions a world where capital needs a place to go, and Bitcoin is going to be that siphon that's going to suck a lot of that capital in. And he's trying to place strategy and all of these different instruments at the smack dab in the center of that new economy, where you have, a world where AI and robotics has killed most of industry by replacing it, right? A lot of the junk we have right now is going to be replaced by AI, it's going to be replaced by robotics, it's going to be replaced by automation. And there's going to be a need for something else. There's going to be a need for a siphon of all that capital that can't all go into AI and robotics. And I think that's where Bitcoin and that's where strategy and that's where all these other different leverage Bitcoin equity plays are going to make hay. So we have a very long road in front of us. And I think that people underestimate just really how early we are, because they see that Bitcoin's at 87,000. They see that strategy already ran up to 543 and came back down. They may think that, the mania is over, but this isn't mania. This is a transition to a new economy. And I think once you're able to have that fundamental shift in view, the sky's the limit. It really opens up to the different ways you can see this thing.
And to add to that, I think that right now is kind of like an inflection point. It's a bit of a hockey stick moment that I think we're about to have for strategy in particular, because I guess the mental model that I have of strategy is that they are a pump to help accelerate the flow, the osmotic, natural, organic flow of capital from bonds, where you're not getting great returns, to Bitcoin. And strategy's whole design is to accelerate that, to pull capital out of the bond market and put it into Bitcoin. And they just upgraded their machinery massively, right? So I don't think people have come to appreciate what the Strike and Strife offerings do, because it just massively reduced the friction involved in sourcing capital from individual convertible notes, moving from that to you're just going to dump ATM into the market to get dollars to go buy Bitcoin with, whenever the conditions are available, and they're going to be able to scale that massively. So you're going to go from these billion-dollar convertible notes to tens and eventually hundreds of billions of dollars raised every year through selling. I think Strife is going to be the bigger one, in my opinion, into the market. And now you're talking about a massively upgraded pump for sucking capital out of the bond market and putting it into Bitcoin.
Well, what he's doing is essentially printing shares to buy Bitcoin, and he's printing shares and sending it into the market. Essentially, Saylor, the reason why I keep saying it's an economy is because governments print money recklessly, as we've all known, right? Right now, Saylor is printing shares very, very methodically. And he's got 3 different printers that he's running off of right now. And I think that people really need to, I don't think that's really clicked for people yet, but when it really does, that the whole concept, when we go all the way back to him doing potentially a speculative attack and the notion of dilution versus accretion, I think those are going to become quaint notions. And I think that when there's going to be a future where Saylor hitting the ATM is going to turn people on to the market more than them trying to doom post on Twitter, trying to say that, oh, he's diluting the shares and it's going to send the price down and so on and so forth. What he's doing is printing shares today for accretion tomorrow. And this model is what he's just doing a different version of the model, whether it's through convertible bonds, whether it's through Strike, whether it's through MSTR, whether it's through Strife. He's using his shares as a way to accumulate the most pristine asset in the world. And I think people really underestimate just how big of a turnaround that's going to produce at these 1, 3, 5, and 10-year intervals.
Jesse, I like the term "the pump." It's almost like it's almost like you're sucking capital out of the bond market with a straw. That's what they had previously, and now you just opened up a river, right? So now you don't have to suck out of a straw anymore. You've got this river of capital that could potentially flow to you, and it's just going to take so long for the market to figure it out, though.
And this goes to an old Trace Mayer visualization of he talked about Bitcoin as being a blueberry, and that you can hook up the city water main to this blueberry and it can infinitely expand. Like that's kind of what we're talking about here. We're pumping more and more capital and tapping into a greater and greater pool of capital by now, addressing the whole bond market rather than just convertible notes.
Right.
Let me ask you this: with
Bitcoin's
Strife
kind
and
of
Strike, how much do you think this impacts their desire to go to the convert market? Right. I mean, at face value, even going to Strike is way more accretive than even the best convertible bonds that they've gotten.
Yeah,
so I'm curious how much they'll go back to that well.
Saylor has said he intends to continue being the largest convertible note issuer, but I think that the ceiling on what's possible with Stripe in particular is much higher than individual convertible notes.
Yep.
I love the analogy too. Like, oh, and by the way, Grain never dropped. I'm Grain with his helmet off.
Yes, we got Soleil.
My alter ego. But yeah, when you called it a pump, because I did my little research on you there, Jesse, and binged your content, getting ready for this. But yeah, when I heard you call it a pump, I was so stoked because, as a founding member of the Paranoid Crypto Anarchist Society, like I'm kind of with Saifedean Moose, and I'm just waiting for Bitcoin's market cap to eat gold and eventually bonds. And we're just kind of like sitting and waiting for that to happen. But now Saylor is making it happen. He's just pumping and siphoning the bond market. Yeah, so I just love looking at it that way.
Yeah, and that's helpful to sort of think about like the alternative, like without these Bitcoin treasury companies exploiting this possibility in raising debt. The alternative is organically, osmotically value flowing from bonds and all other asset buckets into Bitcoin because it's a better store of value asset than anything else out there. And that requires investors waking up and saying, you know what, I should probably sell some of my bonds and then buy Bitcoin with it because I've been orange pilled or whatever, and now I want to increase my allocation there. So that's a tall ask, right? Like that requires quite a bit of individuals like doing their homework and waking up and making a change versus these pumps, this pump of strategy where people don't have to make that decision. He's creating the economic conditions where capital is going to flow in because it's going to go chase the best annual dividend rate available in the bond market, right? Like it goes from requiring a bottoms up grassroots education to a top down, like I'm just going to create the best conditions possible and capital is going to have to flow through my pump.
It's kind of like you threw a pump into a lake, right? But now you got all these other Bitcoin treasury companies throwing their pumps into the lake as well and siphoning all that.
Let's go.
Right? I mean, it just grows and grows and grows. It's going to be incredible to watch.
We made our Bitcoin predictions before both preferreds, right?
True. Yeah.
It's like I want to change my number. I want to get close. I want to go 1.5 million now.
1.5 million. Ben, your question on whether or not they'll shift away from the convertible bond market. The convertible bond market just simulates more volatility, right? Because you have more trading. But then I'm thinking, as you mentioned the other day, like Strife, people should be arbing Strife too, right? And as the price of strategy common rises, we'll probably see even more arbing between Strike between Strike and common MSTR common, right?
Or Strike and Strife, right? Between those two.
It's just like chaos. It's just complete chaos, right? There's going to be 10 million trading strategies that you can do here.
Yeah. And I do think that they'll keep going back to the convertible bond markets, but I think they'll be far more selective because now it's not their primary driver to acquire Bitcoin anymore. Right. So now they can sit and wait until the volatility picks up, right? They can only go to the market when they can get 0% and a 50% plus premium on those, right? This last one they had to get back to the market. They were way too underlevered. They don't have enough scale on Strike yet to use that ATM at its true size. Strife will have a similar thing, right? You've got to build that liquidity up so that you can keep going back to that well. So that one they had to get out. So they had to take a little haircut on the premium there. But now, because they're also building that leverage through the preferreds, I think that they can be very selective and just look for the opportune times where they can maximize the premium with zero cash flow draw off the business with it and use it that way. So I don't think you see them in the convertible market as often, but it could be with bigger size and better terms.
Right.
Well, I love how everything, they're the most transparent company in the stock market, but then at the same time, everything they do causes more chaos. It's impossible to value the company. They're like, okay, we'll just, we'll sell at the ATM. Okay, well, we'll do convertible bonds with collateral that's never been done before. And now we'll just add another preferred, and we'll add another preferred that's a little different. So you just can't figure out how much the company can be worth, should be worth. So it's crazy that they're so transparent and still so hard to figure out.
And the moments when it goes into price discovery, everybody's like, what's it worth? Right?
Mhm.
What's it worth? That's just the most exciting time. I mean, that's when we started the True North, was like right when it went into price discovery again after it broke 200 from the prior March. And it was one of these like, where are we going? How far is this thing going to go?
And here's the other question now, right? If the price does go into price discovery and the mNAV expands, do they still go back heavy on that common stock ATM? If they've got all these other tools out there for them and they're constantly able to be acquiring Bitcoin through all these channels, like I think they will to manage the leverage ratio, but I don't think it's going to be the same as what we saw in Q4, right? I think that they would definitely take advantage of it, but probably not at the same scale that we saw happen in Q4, at least at that speed. It might be a much more steady draw out of that market instead of, tens of billions of dollars in a month and a half or whatever it ended up being.
So the Strike can convert. Okay. So Strike can convert. So when you think about the game theory of how this plays out, right? 10 shares of Strike is 1 share of common. So once the price of the common stock goes above $1,000, there starts to become more incentive to convert the stock. And at that point, there will probably be a new preferred offering that's issued to the market. So then you start to think about the game theory here. It's like, okay, now there's incentive for strategy to pump the stock above $1,000, so they don't have to pay the interest associated with the preferred stock Strike, right? Because at that point, the interest associated with it, basically, what I would do is issue a ton of ATM on Strike. If you know these future, if future capital is going to come into the common stock via potential S&P 500 inclusion or whatever that might be, then you have less incentive to use the ATM once you're above the conversion price, and the market, the people holding the preferred stock that's convertible would prefer to convert and jump into the next instrument that gives them the 8% dividend yield or that 9% dividend yield, whatever it may be, and roll that capital forward.
The other thing you can watch for is, say we end up back in a 0% rate environment again, and those credit spreads are much smaller, where they can go and open a different preferred offering at a much lower yielding dividend, open up an ATM on that one, and they can start issuing. Yeah, they can start issuing on an instrument that they have less cash payments for. Could do the same thing with a Strife type instrument, right? So if we get back to that opportune 0% rate environment, you open up 2 more much lower dividends on those, and now that's where you're using that ATM as long as those environments stay around, right? I mean, there's a lot of flexibility to what they can do here. I think this is how they had to price it, given the interest rate environment we're in now and the spreads that people need to see. But I mean, if those rates do come back down, they've got a lot of flexibility to do a new offering where they can now hit that ATM with a much lower dividend payment, and they can push that going forward. So then maybe you don't have all these, 10% offerings out there anymore. So there's another thing to think about. There's a lot of layers to this. That's what's so fun about this. I mean, the one thing they've done remarkably well, which I can really appreciate, is it's clear they listen to the retail community, because that's how all those metrics on their website came to fruition, right? We were just creating them ad hoc out here, and they started consolidating them. There were other websites stood up around these, and then they went and said, all right, you want the data? Here it is. And as a business intelligence company, they could appreciate that we all wanted this data. And so they've become ultimately transparent on this. And we still don't know what they're going to do. Like, we're just chasing them constantly. Like, who would have thought we'd get a full year worth of content chasing the strategy around? And it still feels like we have no idea what's going on, right? Like, they're
Yeah.
just,
Well,
they
just
throw
more
curveballs all
chaotic.
the time. It's the most
Yeah.
fun thing to chase around the internet.
Yeah. I mean, masterclass and listen to the retail base too. Yeah. Providing the data is just great. Now you have a source of truth, right?
Mhm.
Like other than that, I'm like, scraping these Edgar filings and like, oh my God, I got to go find
Exactly.
like, what is the shares outstanding? Jesus. You
They're
gotta go
listening to
find it.
this right now.
Yeah.
Ed's in here. They're listening.
Yeah. They're hanging out. Thanks for
Yeah, they
hanging
took
out.
the feedback, right? And they went and built around it. Like, you could really appreciate that as an investor, because you want that level of transparency and you want that source of truth where you know that you've got accurate data, and they provide it. And I hope that becomes a model that a lot of these other companies that step into this space adopt as well, because it's one of the things that gives us the ability to get past trying to create our own analytics, and then we can turn our thought process to what's possible, right? We can jump on these streams and, be dreamers about, siphoning all the fiat out of the system and into Bitcoin.
Well,
It's the
and
fun stuff.
if you think about just where like how people are consuming
I'm gonna
media.
drop, guys.
All right, later, Adrian. Thanks for
Yeah,
joining.
yeah, Adrian.
Appreciate it. If you think about just how people are consuming media these days, it's getting faster and faster and decentralized. So if it's getting faster and faster and decentralized, gone are the days of the old farts waking up and reading the Wall Street Journal, right? Like, that's how people used to get their information on like what was going on, and that's how they would buy their stocks, and they would look at the yield curve on that. It's a completely different world. And so now, you have a decentralized investor base, and the retail community is growing and growing just in terms of investing, and they're becoming a little bit more powerful here and there. And you can see it with these social phenomenon that are happening, like Strategy, GameStop. You see it with Palantir. You see it with AppLovin. Some of these stocks that have these meteoric rise, and just a really strong retail investor base. And that's the way of the future. I mean, given that decentralized media and groups like this, like communities that are, naturally coming together because they're interested in this equity, they're invested in it. And that's how these equities are going to potentially grow. So you need to have like a retail media base and a strong foothold in understanding your retail community and communication, right? Like, communication is huge. I think that's something that Strategy's done incredibly well. Is like, Saylor is one of the hardest working guys in the entire market, running around on every single one of these podcasts. I mean, I don't know how he does it. So yeah, I think it's really, really helpful, really powerful for the investor base to have that retail connection.
Yeah. And you want a few more leaders to step out very publicly here and start picking up that torch as well, right? I mean, Saylor's carried a massive portion of the educational load here for everybody else. I mean, Dylan and the Metaplanet guys have also done really awesome. And you want to see a few more leaders that really understand what this strategy means, why they're doing it, how it impacts the market, the broader macro picture here, where we get a few more champions out in the market that are really pushing Bitcoin and helping to educate people on exactly how powerful this asset is.
Yeah, absolutely. I think Tad might pop up. Tim, you could share the link to Tad. In the meantime, I'll pull up the S&P 500 calculations just because I think it's interesting. And I know some people want us to talk about Josh Mandel's 84K, so maybe we'll get to that as well. But I did some calculations. I know this is a big focus point for a lot of people, understanding or thinking about MSTR potentially getting included in the S&P 500. There's been a lot of focus on, what's the price of Bitcoin going to be at the end of the quarter for them potentially getting included, for having positive earnings summed together over the last 4 quarters. So I've got some calculations and some math on this pulled up here. And I think, a lot of people are really concerned, like if Bitcoin doesn't go to that that threshold, that the stock's going to sell off, or so. I don't think that's the case, right? Like if Strategy doesn't hit that threshold for them to, erase their negative earnings, the market just sees the past non-FASB accounting basically. Like the last 36 months have had negative accounting, and it would just be one more quarter of negative accounting. And so the market wouldn't even grasp or capture or understand FASB fair value accounting. It would just be delayed another quarter or it'd be just delayed until they have a positive blowout earnings per share announcement as a function of the adoption of FASB fair value accounting. So up here on this top half of the screen here, these are all of the Bitcoin purchases that Strategy has made in Q1 2025. I ripped this directly from the Strategy website. So this is the average cost of the Bitcoin price. This is how much Bitcoin they bought in column C. And so the net relative position, the net position per Bitcoin purchased, is here in this column E. So the total net position, this is multiplication of the net position per Bitcoin multiplied by the Bitcoin purchased. And so you could see a couple of their purchases recently, just in the past couple of weeks, because the price of Bitcoin has been depressed. They are in a profit position on their most recent purchases. However, the purchases made between January 6th and February 24th are in a negative net position. So the Q1 purchases are in about a $609 million negative net position. And starting the quarter, Strategy had 446,400 Bitcoin. The price of Bitcoin at close was $93,429. So $5,761 loss per Bitcoin multiplied by 446,000 gives you a $2.57 billion loss. So the estimated loss as of today, with a Bitcoin price of $87,667, the total estimated loss on the balance sheet is for Q1 is $3.2 billion. Looks like it just updated there. So what does the price need to be in order for Strategy to erase the last 4 quarters of negative earnings summed together? So I've pulled this together over here in the upper right-hand corner. So this is the quarterly net income as reported by Strategy. So if you look at the last 3 quarters, negative 671 million, 340 million, 103 million. So summed together, the last 3 quarters are $1.1 billion, or $1.14 billion. So basically, Strategy needs to have a positive net income greater than $1.114 billion in Q1 2025 in order to have positive earnings summed together for the last 4 quarters. So this calculation down here on the bottom here, so I'm testing the Bitcoin price. This little calculator I built here is the Bitcoin price. What does the Bitcoin price need to be to have an estimated gain on the balance sheet of $1.115 billion? So as you can see here, the price of Bitcoin needs to go to $96,156 in order for Strategy to have a net income in Q1 that erases the last 3 quarters of negative of losses of net income, historically, which would then qualify them for the S&P 500. This is the final threshold that Strategy needs to hit to qualify for the S&P 500. They're well in excess the market cap threshold. What really carries the weight here is the existing Bitcoin that they had on the balance sheet going into Q1, 446,000 Bitcoin at a closing price at the end of Q4 of $93,429. You're looking at about a $2,700 gain on a huge stack of Bitcoin, which would be about $1.2 billion. That would pretty much carry the load, despite them having negative or having losses on a tranche of some of their purchases that they made during Q1. So that's all I've got. Anybody else want to add or got questions on how this works?
No, I think that's a great summary. And I think the one thing you look at is I see this and I go, we got a chance.
We got a chance.
I wouldn't be surprised if MicroStrategy is in the market right now, right? I think they closed the offering on STRF today, so the shares were getting delivered. So they've got their 700 million. You know that GameStop's going for 1.3 billion, which probably means 1.5 billion, which might mean 1.75 billion, right? We'll see. And if they close that Friday, they might be buying through the market and into Monday. There's a chance we're not out of the game yet.
We've got common stock ATM that they probably use this week because the price of the common ran up as well. So if they raise another 500 million like they raised last week, you've got all of these moving pieces. And hell, Metaplanet's been buying like nobody's business too. So they might be in the market as well.
I just love that we have a bogey to cheer for, guys.
Hell yeah.
It makes it fun.
Well, great to see you, Tad. Thanks for joining as well. Another special guest, Tad Smith. Thanks for being here.
Hi, Jeff. How are you? You guys have had a very good show.
Thank you.
By the way, we have more than just a chance because we've got Josh.
Yes, we
That's
got.
right.
I'm
Josh
glad
can
you
hit
joined.
84,000 with 5 months notice. Don't you think he can get us up there in the next few days? I mean, what am I missing?
Josh, we need 96,156. I know you're a market.
Yeah, let's
maker.
repeat it one more time for him. 96,156. Josh, you got this.
Get to the decimals, though. He's a guy of precision, so we need Josh Stradamus to have a precision number to root for, manifest for us.
No more, no less. It's got to be 96,156. No, I mean, and that's actually
Maybe
one more-
round it up to 157.
One more point on that. We don't know
There
how
you
much
go.
we don't know how much they purchased this week at a depressed price.
True.
Excellent point.
So
True.
it might be 90. Like we're not going to know. So we can't give them a number. We won't know until Monday.
We like to overshoot the targets.
96 ish.
Oh,
Well,
he
what-
knows the number.
He knows.
Oh, yeah.
Josh Tradamus. Love that.
Yeah. I mean,
So, Ted, what was your take? I know you were
Yeah,
listening when Jesse was talking about the pump analogy on MicroStrategy. What was your take on that?
I thought Jesse totally nailed it, honestly, but not surprising. I thought it was all very good. I think the one thing you guys haven't talked about that I'll just add, if I may chip in one thing, which is there is 3 big themes going on with this stock, GameStop, Palantir, Tesla, that crowd, maybe a little bit of Rocket Lab, but those 4 particularly. And that is the incredible democratization of the technology to be able to be analysts and cover it and spread the word. It used to be that gatekeepers were the ones that oversaw the sort of information flow on Wall Street and on the stocks. And what's really powerful about MSTR True North is that not only are you, in effect, democratizing access to information about the stocks, the reflexivity of that is fueling the power of MicroStrategy, and that power is in turn energizing the base to talk about it. And that reflexivity gives it a whole new method. So what you guys are really doing is creating a whole new way to think about appreciating assets in the new world. And to me, it's really powerful. And you guys talked a lot about GameStop, and GameStop sort of, and Jeff, you were there right on the cutting edge, right? GameStop, in effect, pioneered it and showed the way. And then along comes MicroStrategy, now Strategy, and they created this new idea, which is we're going to have volatility, and the volatility will feed off of the reflexivity of the enthusiasm for the volatility. And that power is really, really something. And that creates, in my mind, an awesome financial enterprise.
yeah.
Absolutely.
I mean,
I think that was
it's
one
the
of the-
biggest story in finance. It's the biggest story in all of
It
finance.
is the
right now.
biggest story in finance.
Yeah.
And it's ironic too, Jeff, because it's the biggest story in finance that a lot of traditional finance doesn't want to talk about.
They laugh at it. They're like,
And,
Well, but
and
that goes back
to
to that
add-
retail base, right? Because it's a message and a signal amplifier that didn't used to exist, right? We always took the approach early on where we said investing is an individual sport, but research is a team sport. And so when you start putting all your research out there individually and running these metrics, and people start moving into these communities, they really start amplifying that message. So when you get into an area like we found here with Bitcoin and the way that they're using this on a corporate balance sheet, that message gets amplified out there, and people who would never get exposed to it are going to come across it if they're anywhere out there on social media. I mean, the stuff that pops into my feed on all the social media platforms is amazing now because you never used to see it, but you have so many new independent thought leaders out there that weren't raised in the traditional finance roles that are out there. And so they think differently about all these companies and what the possibilities are. And I think that's an incredibly powerful tool. And if you're one of these executives at the company, I think it's an incredibly powerful tool that you should tune into because you're getting constant crowdsourced ideas for how to evolve your business. And I think that that's something that the leaders that really value that input and see their companies in that position of constant transformation, they can harness that power and get people engaged that are going to help them evolve into whatever their companies are going to be next. I think it's a major shift out there for the companies that are forward looking.
And you said it earlier, it's a real strength for these companies. And
Yes.
there are not a lot that can do it, very few. MSTR, in my mind, is right at the top of the list. And the strength of its retail base. And by the way, what's really interesting to me is when you look at the big shareholders on the cap table of Strategy, they're some of the largest institutions in the world. And yet they are, in some sense, emulating the retail behavior with respect to the stock. It's fascinating. So retail is really driving this one. This is the force. We saw a little bit of an echo of it in GameStop, the first trip around with GameStop, and it's a really virtuous cycle. So there's a real flywheel here, and it's really powerful.
Yeah, I definitely agree. It's the biggest story in finance, with the possible competition of what Tad was pointed out in that excellent video you had, Tad, of over, I don't know what time period, all of the returns is just money printing. And so everyone chasing yield, everyone chasing returns in the market is just treading water, and they don't even realize it. And you're forced to take all the risk without actually getting anywhere.
There's a lot of noise about the video because there's a lot of debate about my numbers or whether my math is right or wrong. And it's interesting because the analysts that look at liquidity more closely than anybody else, and I won't name them here, but one of them is at 11% is the annual rate, and that includes sort of 8% debasement and 3%. And the others start with M2, which a lot of people think about, but then they add on. You have to think about the capital markets are global. So you have M2 not just here, but M2 overseas. You have bond volatility. You have all sorts of other growth of the balance sheet. So it really is a very interesting problem that we all face. And whether, by the way, it is 6% M2, which I think is much too low, or 8% or 9% or 11%, holding cash is risky. That's the bottom line.
That's a big statement. Yeah.
Yeah.
Holding cash is risky.
It's the convergence of those two biggest stories in finance that Bitcoin is, ultimately. It's the exit out from one of these problems, and it's the grassroots realization that this is a better asset to hold than cash or bonds or anything on the global asset landscape chart.
Yeah, you just have to be, and the price of it, meaning the cost of it to us, is the volatility, the sharp drops. We've all been sort of suffering through a 30% plunge in Bitcoin recently. And by the way, anyone who steps back and looks at the charts, it's a garden variety plunge. It's just it's just another day. What do we, I think I just saw a chart, maybe from Raul Powell or somebody or Julian Battelle, that said we're in our 7th correction in this bull run. And that's perfectly normal, 30%. In fact, arguably, it's a relatively mild correction relative to prior runs. But it sure doesn't feel like it, does it?
It's just the numbers are bigger.
The numbers are bigger.
Yeah, they never feel good. They never feel good, but they keep going and leaving,
Yeah. Well, welcome back, Jeff. It was really really great for me. I enjoyed seeing you all. You guys did a great job.
Yeah. Thanks, Dad. Appreciate it.
And Grain's back.
And we got Grain back.
Yep, I figured I'd come back and after I got some dinner. So how you guys doing? I caught the tail end of that.
Yeah,
I love the democratization. I mean, I think that's what we're trying to give retail traders or retail investors a chance right here. And a lot of the narratives that are perpetuated by mainstream media is that you can't do this. It doesn't work that way. And I think that's really where we're at today. It's just a change in the whole mindset due to social media. How do we get 33,000 people listening for 2 hours? That is like impossible to do with any amount of money. You just cannot make that happen.
I've got 37,764 on all platforms as well.
Okay, so 37,000. Literally, Tad, how big is Madison Square Garden? Weren't you the CEO of that?
I was the CEO in a prior life, and of course it depends on the configuration, but much past 19,000 stretching it.
Yeah, and you just think about some of the largest conferences that there are. This has a weekly phone call. It just gets larger amounts of people showing up. It's just it's phenomenal.
2 MSGs right now.
Yeah, 2 MSGs at midnight talking about one stock. How wild is that, right? It's
Yeah,
crazy.
wow.
I mean, if this doesn't prove a simulation somewhere, I don't know what does. But
We're all in a simulation.
We've got to be.
You know, one of the craziest parts is that Jesse's on the call and he's talking about this $300 trillion bond market. I don't know if there's any bond people that are on this call, but this is the market that Saylor's going after, and that is just a compelling story to have. It's amazing.
I do think we need to track. Ted, you made a comment earlier about the size of the Fed balance sheet, and I think that'll be an interesting metric to track, because what's that at, 6.7 trillion or something like that?
676 is what it is right now, according to ChatGPT. I just checked.
Of assets?
Yeah.
$6.76 trillion
Okay.
in assets. Yeah.
I did that calculation earlier. That's what I got off of Grok, and because they have a 600% leverage ratio, right? Jesse, you were bringing up like risk-free. You think about treasuries, are they risk-free? And you're like, okay, well, you've got the U.S. government that's a company that's a 600% leverage ratio, and you're looking at strategy with like an 11% leverage ratio. You're like, holy shit! Like, and it's like a non-risky asset.
I mean, I remember in finance classes 10, 15 years ago being told, like, you know, as isn't this fun little trivia, that there are some corporate bonds that are lower rates than U.S. debt, meaning like there are some companies that are in better financial circumstances and are more likely to be going concerns without defaulting than governments. And that was, 10, 15 years ago. So, that trend is accelerated and will keep getting worse. Meanwhile, Bitcoin will keep getting stronger, less risky, more proven, and strategy is really going to be like the destination for tapping into that if you want to get risk-free returns via Strife or potentially Strike. And I think that we're going to start to see a shift over time of people starting to think about strategy, because it is like the nexus for Bitcoin
Jesse,
as low risk as the U.S. government.
I want to clip that and just slam it down Peter Schiff's throat. I mean, oh my God, he's gonna try to shit all over that.
By the way, I want to chime in. Yeah, I want to chime in on this part. Peter Schiff keeps on saying that Michael Saylor keeps on pumping Bitcoin to increase the price of strategy shares, but Peter Schiff pumps gold to increase what he holds. It is the responsibility and a fiduciary responsibility for the corporate CEO to increase shareholder value. And when he says that is absurd, because that's exactly what he does for gold. But yet logically, he doesn't like when Saylor does it. What he says about Bitcoin. And any person that runs a company, their goal is to increase the value of their company. I find this to be just illogical and absurd when he says this. I mean,
it's like arguing that you should use seashells and seashells are the best. Everyone's gonna root for the team that they're on, and then it's economic Darwinism for who ends up winning.
Yeah, Schiff's always going to make it sound nefarious when it comes to Saylor, right? I mean, this is the caricature that he's created for himself, and he's a brilliant marketer. You got to give him that. I mean, Peter Schiff has a way of staying out there in the media cycles like nobody I've ever seen before, because he will double down on being wrong for decades. So you got to admire the tenacity there. But then when you listen to Saylor doesn't sound like a guy that's operating on a short time frame at all. He really does view this as a very long-term transformation in capital. And right now he is acquiring as much of it as he can because he's stunned that everyone else hasn't figured it out yet. He knows something everyone else doesn't. And what was his quote? He couldn't sleep at night because he thought everyone else was going to figure it out. He's still operating in that mode, right? Even though he's got this massive advantage in scale right now, it doesn't matter because he's still looking at this and understanding that the rest of the world still hasn't caught on. But it's getting close. You can't watch the news cycles that are happening right now and think that anything's going to happen except more adoption, right? You don't get executive orders from the largest country or the strongest economy in the world, the administration, and not think that when you've got Howard Lutnick and Scott Bessent in charge of finding ways to accumulate Bitcoin in a budget neutral way, These are guys that own massive positions in Bitcoin. Their companies own massive positions in MicroStrategy because Cantor's got a big position over there. Like, you can't have an administration packed with this many people that do understand Bitcoin and think that we're in a bearish cycle right now. Like, it doesn't seem like price is caught up to the news. This feels like one of those disconnects that you kind of always dream about, where you're trying to convince yourself that you must be missing something because there's so much good news coming out and the price is way lower than what fair value feels like.
I'll say that this right now feels the closest that it has felt to Q3 2020 for me.
Yes.
In Bitcoin, Q3 2020, we had the halving 6 months earlier. MicroStrategy just showed up, was starting to buy, and we were still at $9,000 per Bitcoin, and a price that you had been at it in 2017. And it was so clear to like Bitcoin Twitter that there was just a lag between the changed reality and price catching up to that, or moving up, taking a leg up to the next plateau. And
No, I
it
don't
feels
think
like
any
that
of-
now because we live in a changed world now with the SBR and GameStop now. Like, these Bitcoin treasury companies have figured out the playbook and they're rolling it out all over the world. And nation states are now quietly scrambling to figure out, like, do I need to be stacking Bitcoin? And some of them will. And yet the price is still where we have been for 4 years, basically,
Yeah.
So I think it's just a matter of time before we take the next leg up to where we should be in this new world.
The risk-adjusted opportunity has never seemed better than it is right now.
Right. The other way you can look at this is the fancy word arbitrage. There's a difference between what the spot price is today and what they suspect the inefficiency in the market of where the price should actually be. So that is, if you just buy something and hold its spot, that's a so-called call option. I think this will be worth more value in the future, and then I could sell a part of it if I want to, or just hodl it forever. So that's the idea that's going on right now. You can use all these fancy different words to describe that, but for some reason it gets labeled, oh, this is a speculative asset. But all assets are speculative. Why else would we buy? Why would I buy something if I think the value is going to go down, unless for some reason I'm trying to short it? But in many cases, when they try and short the market, it's to acquire more of that actual value itself, because they know that it's very valuable. And that's where you get into the thought process is, how do you convince yourself to be comfortable with something that they say in mainstream media has no intrinsic value? And that's when you go back to this whole circular logic. And that's why this call, I think, is so compelling, because we're talking about this. We get it. There's 37,000 people on this call that are understanding this. And then for some reason, the greater part of America doesn't, or the world. And I think that's really awesome.
There have never been more people working in Bitcoin than there are today. And that's the utility value for Bitcoin is going to continue to increase, right? These collateralized instruments, lending instruments, credit wrapped products, like everybody and their mother is trying to crack that nut too. And once additional capital starts coming in the door with these alternative collateralized instruments, outside of what strategy is doing in collateralizing their balance sheet, but offering these additional products where people don't have to sell their Bitcoin, it's just wrapped into a traditional mortgage, or it's wrapped into a commercial real estate mortgage or something like that. It's like all of a sudden you might have a huge swath of people that are running to buy Bitcoin because they're able to get better interest rate on a credit wrapped mortgage product, or whatever that might be. And that's the next couple months and next couple of quarters, we're going to see those continue to evolve.
The sophisticated and familiar lending products, I think, are what's going to create a huge wave into Bitcoin, right? When you get closer to being able to go borrow at like SOFR plus rates, something that's very familiar to people out there in the market, and you're no longer borrowing at, 14, 16% like we are today. I think when people realize that now they've got an easy, low friction way to access the value of the asset that they're accumulating, I think that a lot of people holding a lot of these other assets, things like real estate, I think that there's going to be a high value proposition to converting that over to Bitcoin because of, one, how liquid it is. Two, you understand the problems with our money today and that debasement and the inflation that's out there. And then three, that now you can access that value at will, right? I think that's going to be very powerful because I think right now people are still in the mindset of, okay, I accumulate all this Bitcoin. Now what do I do with it, right? I'm not supposed to sell it. Like, am I just supposed to hold it and die with it, right? Like, I think that's what people are still struggling with, but I think we're really close now to where that market opens up. People are now able to utilize that value that they've accumulated, and they get to continue to hold that asset. And that's going to be really powerful in incentivizing people to use this as their primary savings asset.
Yeah, I mean, I think that's a great point. What everybody knows about Warren Buffett, he says this all the time. Oh, I pay a lower tax rate than my secretary or my admin. And he says that, and he talks about that like, oh, because that secretary or that admin is making ordinary income and he has collateral in the form of stocks, and that's taxed at capital gains rates. But whenever you say this, for some reason, they're like, oh, that's a bad thing. But that's the way that the rich people get rich, is by holding assets that they can borrow against. So have that best asset, which obviously we believe is Bitcoin. And if it's good for a person, then it's good for a company. It's good for a nation state. I want to chime in here, and I'm on my little rant here, Jeff. Jeff coined this term, the most hated rally ever. When and if GameStop buys Bitcoin, you just squared the most hated rally ever. They're just going to pull them back on. Oh my God, Ryan Cohen, why are you buying Bitcoin? And you're just like Saylor, tell us the difference. And we hear this constant narrative that, oh, it's a dead company. I like how these dead companies increase shareholder value by having an increased stock price. I mean, that's my metric is, did your market cap go up? Is your house worth more money? Now, we understand the part about monetary debasement, but if you're holding that asset that's not being debased, and Jesse, you use the term accretion, it's dilution by accretion. That term, I had never heard of being accretive prior to strategy doing this. And once I learned that new term, everyone's like, oh, well, he's diluting the shares by selling more of them. I'm like, but it's actually accretive to the shareholders. They're like, what?
You can't unsee it. You can't unsee accretive dilution. You're like,
all right, accretive dilution.
that one hit me like a ton of bricks. I first heard that chatting with Dylan LeClaire, and he used that phrase, and like it just kind of stopped me in my tracks. Like, that's not possible. This was like a year ago. It's like, that's not possible. And then I would like have been, I was thinking about it for weeks after that, about like, holy shit, it is possible. And like this, you just don't encounter that. It's not a thing in finance to hear about accretive dilution. Dilution is dilution. Dilution is a desperate move.
I think Saylor doesn't even like a dilution. I think he even was like, he's like, Dylan, shut up. Just, it's accretion. It's not.
Wait, guys, I got a better one for you. You know what a bad idea is for a company? What they do is they do something called a stock buyback. What are they doing with a stock buyback? They have a bunch of cash sitting on their balance sheet. They buy back their own shares because they want to reduce the float, the amount of shares that are out there, so the share price goes up. It's like, wait a second, you're not smart enough to invest that money by buying another cash flowing business. So then you're doing financial engineering, which you hate Saylor for doing, right? You're doing the exact same thing by buying back those shares. What I would tell those people is, wow, it seems like you got the Bitcoin playbook, because you're reducing the amount of the float and you're reducing the outside shares to drive the price up. So I'm like, oh my God, you're pumping your own bags. We're back to where we got to before. And I'm like, and you just use those terms back on traditional finance. Tad, please correct me if I got any of these terms wrong.
No, I was just smarting from the fact that when I ran a public company, I bought the shares back.
Okay. But why? Okay, but why?
Because there's no other.
Because you wanted to increase shareholder value, right?
Well, I guess I just didn't, I don't know what to say.
Didn't know to buy Bitcoin.
That was the only game in town.
Huh?
One thing I will say, though, isn't it amazing that in a world of AI and robots on the way and all the automation that we face, Bitcoin is at its core, the result of the success of Bitcoin is at its core, it's people like the folks watching this group that are talking to their friends, talking to their parents, talking to their friends, orange pilling one person at a time, or in the case of Michael Saylor, you know, we talked about how hard he works flying all over the world over and over and over again, 1,000 podcasts, orange pilling, you know, batches and batches of people. It really is a message of financial possibility, liberation, a whole bunch of different kinds of things. And that's what's really, to me, the great, wonderful irony. And by the way, one of the other things that occurred to me was we win those people over by being patient and waiting for them rather than picking fights with them. So from my perspective, it's a real opportunity, and what you guys are doing is a real opportunity to spread the word. Because it's more than just number go up. There's a reason we all got into this.
Yeah,
and it was more
upgrade
than
the world. Yeah, upgrade the world.
Yeah.
Upgrade the
It
world.
falls into that once you've seen it, you can't unsee it category, right?
You
And
can't
you have to
unsee
let
it.
the people, you try to lead them as close to it so they can see it themselves. But until they do, you can't build that same conviction, right? It's one thing when someone tells you to do something. And even if it's someone you trust, it's one thing for someone to say, hey, you should buy Bitcoin. If you buy the Bitcoin, but you don't really understand why you're buying the Bitcoin and what that asset is that you're holding, you can't form that same conviction level. Like I think for most of us on here, at least for me, I mean, Bitcoin really quickly became the most peaceful part of my portfolio. I don't ever look at it because it's such a long-term asset for me. And I understand the problem that it's saving me from. So I have no issue buying it as frequently as I can. I was telling people the other day that I had a rule where every time I see news where I go, if I looked back on this news, would I think to myself, man, it was so obvious. And then I go buy $500 of Bitcoin. Like every time I see one of those news cycles, it keeps me buying. But it's the most peaceful part of the portfolio because I have no intention of getting rid of it. So, it becomes very, very easy once you've built that conviction, you know why you own it, and you know that you want to get as much of it, and you see all the progress in the ecosystem of all these brilliant people coming in and building out the infrastructure and the products that we're going to need to push this thing forward into its next evolution. I think that's so underrated because we've got some of the greatest minds, some of the greatest tech people that are coming over. They see this as the revolution it is. It's been a grassroots effort from the beginning. And here we are finally watching it emerge. It's getting the recognition from the people who should have fought against it the most. And that's what real capitulation's looking like. We're winning. And we're finally at that point where I don't think that it's going back. I think this is completely here to stay. And I think it's going to be taking over significant portions of the markets now.
Yeah.
I want to
go
quick
ahead, Greg.
point on that. Yeah, look, I think that it's possible that GameStop buys Bitcoin very, very quickly. I think that just their announcement of this is an inflection point. And while the SBR and all the information that happened with the new administration were inflection points, the speed at which this moves by having another large publicly traded company, we already discussed about GameStop being the original meme stock, that can move things very quickly, very fast. And then people will be like, oh, wow, this happened again. And so what happens is if people aren't aware that happened, because it's a relatively niche area, I do get that Saylor has 4 million plus followers. But if they're unaware of this and it happens very quickly, they'll be like, where were you for the past 3 months, 4 months since the new administration came in? All of these executive orders came out, and now all of a sudden GameStop could be buying this within the next 72 hours, and the price, could go way up. And so I just look at this, it's like, this is the best news ever that's been this cycle, barring whatever the price is. I don't know how people can't be excited about it.
Absolutely. All right, we're 2 hours 15 minutes in. Actually, Soleil, hop in there, get your thought in, and we'll run around and do final thoughts.
Yeah, I was just reminded what Ben said about that being the most peaceful part of your portfolio. I don't remember the last time I looked at a daily chart. Like when I look at charts, it's like a year's worth, because I don't really care to see what the price is doing a minute. You know what I mean? Like 5 minutes of Bitcoin price action. Who gives a shit? Like it's just zoomed out forever.
It fixed time preference, right?
Yeah.
It teaches you to reprogram yourself. Our society got so pulled into, short-term gratification, short time preference on anything. And, Bitcoin forced you to think really long term, right? You're thinking in terms of decades and centuries when you're thinking about Bitcoin. So it changes your mental model around time preferences. I think that's a pretty cool evolution of this.
Absolutely. Great context. Maybe we'll pass it over to Tim and Tad, do a combined final thoughts. You guys want to do final thoughts, and we'll pass it around. We'll go through the circle.
I think my last favorite comment from tonight is that next time we're going to get Tad his own screen. So I think that's reasonable, right? It's really affecting the viewer count, so we don't love that. But yeah, Tim and Tad, and Bitcoin is the hurdle rate. I know that's some other podcast somewhere, but I mean, that's kind of the bottom line. And the more that we can all think deeply about that, I think the better off our decision making is going to be.
So I was struck by what Soleil said a minute ago. I know that he's right on that the day chart. And while I know intellectually that volatility is vitality, I'll tell you one thing: it sure feels a heck of a lot better when it's a green candle than a red one.
Yeah, that's true. This is true. Thanks, Tim and Tad. Over to you, Ben.
I think I'm good. I've said a lot already, so I think I'm good. We can pass it to someone else.
We're going higher. Jesse, thank you for joining your first guest appearance. You have the crowd has absolutely loved it, as you saw in the comments.
Awesome.
I know you've got a little one, so let you get final thoughts. We'll get out of here.
No, yeah, this was super fun. Thanks for inviting me, guys. I'm working on something right now that may constitute an additional appearance in the future. Might be right up your alley. So hope to be able to share about that in the future.
Upgrade the world.
Yeah, I'm having a lot of fun recently, digging into Saylor's Bitcoin 24 model, and then the details of Strike and Strife and other products. I've been putting those out on Twitter just as threads. I'm going to drop one tomorrow morning that digs into like how Saylor's getting to 13 million and what are the assumptions. So if people want to get that, follow me at Croesus_BTC. You can search Jesse Myers too. And yeah, I think that it's an important thing in this sort of grassroots analyst world to get excited about stuff that you want to know about, and then do the analysis and put it out for people.
Share it.
And I've been having a lot of fun doing that, getting back to what I used to do 4 years ago. So I'll keep doing that too. But I encourage everybody to, if there's some little corner of Bitcoin analysis that you think is awesome and people aren't paying attention to, do the analysis, put it out.
100%.
Fantastic advice. I always think that people think like me, but everybody thinks differently, and they've all got their own perspective, and share it, right? And those ideas, you'll sharpen them, and it'll continue to grow over time. Great. Thanks for joining, Jesse. Over to you, Soleil.
Yeah, back to what Tad said about democratization, and Bitcoin has the immaculate conception, but so did True North. Jeff didn't say, "Hey, you guys want to do this and I'll pay you." It was like, "Hey, you guys want to do this for free?" And we're like, "Oh, hell yeah. Let's just do this for free because it's a lot of fun
every week."
Yeah, exactly. And it's just Bitcoin's imposing the free market on the world, and it's just seeping into everything for the better.
Going higher. Absolutely. Grain of salt. Final thoughts.
Final thought: it's always a dynamic and changing market. And that's the key to a really great investor, is being able to change your view of that market to adapt what's going on. And so with this, the market's going to constantly change. It's going to constantly make you feel uncomfortable about something that's happened, because it's that uncertainty. And if you do the homework, if you listen to these spaces and go take everything with a little degree of skepticism, I think that you'll do well. And I think these spaces are great. And thank you for always inviting me.
Absolutely. Thanks for being here, Grain. And my final thought: we're about 42,000 people. It's funny, Josh just posted 40 number 42. Thank you to everybody for being here. Thank you for hanging around in the chat. My final thoughts are: we've got Strategy World coming up in May. It's going to be incredibly exciting. We've got a lot of energy that seems to be building, a lot of excitement with GameStop. European companies adopting a Bitcoin treasury strategy. And my timeline has never been so filled with so much information. So it's just an incredibly exciting time to be working in Bitcoin. And my last piece is, when you reach escape velocity, upgrade the world, right? I feel indebted to, continuing to build in this ecosystem, because it's not a zero-sum game, right? Like I'm not working against these people on the screen. Like we're all working together. And, it seems like it was one of the things that really bugged me about the fiat ecosystem is it seems like a zero-sum game. You've got winners and losers, and it's hard to be a winner if you're not born in the right household. And this is one of the new system. It's a new system that it's not a zero-sum game. It gives me a lot of hope for humanity. So I want to continue to put my energy into that ecosystem. So, yeah.
Yeah, one point to that, Jeff, because someone made a post earlier today, about being the sum of the 4 people you're around. I think that the beauty for all of us is we found way more people than that. Right? Like I have so many people now that I never would have connected with anywhere else but through X, through these streams, through all the events that we all end up at out there, where you find some of the most engaging and interesting people that help to constantly stretch you further, right? They make you push for a higher bar and a higher level. And I think that's so unique to this community. You didn't used to get that in these internet communities, right? It was always more of a teardown culture. And Bitcoin and MicroStrategy has been the exact opposite, right? It's really been like a teamwork effort, right? Everyone's kind of pushing and changing people's thought processes. And I think it's just such an awesome community that's out there. And you get a ton of credit for pulling most of this together and getting us all, this band of misfits out here to talk every week and interact with the rest of the community. And we've just met so many really awesome people. So it's been very cool.
Thank you, Ben.
And
Appreciate it.
And all of this is going to allow us to do what Josh Mandel just said, which is together, we're going to upgrade the world and we're going to run the table.
Yes, run the table. Absolutely. And with that, we'll end it there. Thank you, everybody, for joining. And we've got 42,000 viewers. Appreciate it.
Awesome.
We'll see you next week.